well documented in the press $15 billion transaction that the NCB Financial Group has just completed with the Jamaica Broilers Group. I know it seems like a cheap plug, but I've read the articles leading up to this conference. There's a lot of inaccuracy. And if I have to convince you why strong, large indigenous institutions are important to where we live, I think this is the best medium for me to do so. So just to get some of the mechanics out of the way, and I invite the press to listen very carefully. The transaction that NCB Financial Group did with the Jamaica Broilers Group, and it's two public firms, so in time you would read about it in quarterly releases. It took 6 months. 6 months is double the time the typical capital markets transaction takes. And it took 6 months because Jamaica Broilers ran into very, very significant headwinds in the US. And we had to spend 6 months doing the deepest diligence I've ever been a part of to turn the corner where comfort is concerned. And what we did is we ring-fenced our transactions from the US operations. We moved the exposure from being unsecured to fully secured. We operated across the NCB Financial Group, where we have the longest money with pension plans and insurance money, and the shortest money from banks, and the medium money from a broker-dealer. So we took every part of the NCB Financial Group, and we put it into this transaction to make sure we custom-tailored the deal to assist Jamaica Broilers to go to the next stage. So we essentially put funding in a custom-tailored manner across every point of the curve, by flexing the broad and breadth of the NCB Financial Group. In addition to that, we would have blended the approach by merging our corporate and investment banking teams recently at NCB. And the tangible evidence of that is a transaction here, where it is multi-tranche. There's bank loans in there, there's long-term bonds in there, there's medium-term bonds in there. So we really took the group as the largest financial group in Jamaica, and probably the second largest financial conglomerate in the region, to work with the largest indigenous agricultural firm here in Jamaica. And why was that important? It's important because Jamaica Broilers has 2,500 staff. Jamaica Broilers has over 12,000 indirect staff. Wherever Jamaica Broilers operations are, their communities built around it and depend on it. Employment and food security is very, very important in Jamaica. Jamaica Broilers has 2/3 market share in the domestic poultry space here in Jamaica. That's food security, that's employment. There was no way the largest FI, indigenous FI, is going to look at the largest indigenous agri-firm here in Jamaica and not get involved. And it was not fly by night. I said it took 6 months to get this transaction done. My friends, that is the best way I can think about demonstrating to you how important large, strong, indigenous financial institutions are to us here in the Caribbean region. Building a better Jamaica. Who else can do this other than NCB? And of course, we take our role in Jamaica and the region very seriously. Thank you.
All right, everybody, I hope you are all listening and making notes, because we're going to have a question and answer session right after. And I hope that you all make key notes on the questions we're going to ask each of the CEOs. I'm going to welcome now Mr. Jerome Smalley. He is the CEO of the MNB Bank. Jerome.
Thank you. Good morning. At the JMB Group, our purpose remained steady for more than 30 years, to be true financial partner, walking alongside our clients, anchoring everything we do in love, partnership, and mutual respect. values that our clients know and trust. As market evolves, our commitment remains unchanged to provide the right advice, right access, and the right support at every stage of our clients' journeys. When we think about 2026, we see a year of cautious optimism and meaningful opportunities. If, of course, we approach them with clarity, discipline, and a deep partnership. We have identified several factors that we must be prepared to navigate in Jamaica and across the Caribbean. The theme of this conference is consistent with the JMMB Group, a regional player with physical presence in 4 Caribbean countries and a track record of having delivered capital market solutions to multiple players across the hemisphere. Currently, economies continue to face uncertainties of fluctuating interest rates, inflation, and climate-related exposures. We have, however, flagged the shifting geopolitical landscape as a major emerging factor to be considered and navigated, along with environmental challenges and low access to financial services for the most vulnerable segments of the communities that we serve. From a geopolitical perspective, we operate in jurisdictions that are front and center of recent developments. And while the news houses have moved on to activities outside of our region, we must remain focused on crafting strategies to mitigate against the negative effects of a potentially divided Caribbean. In fact, as a regional player, we see ourselves as a catalyst for continued collaboration versus a return to nationalistic postures. In our experience, a unified Caribbean approach with combined efforts, free flow of capital, talent, and culture is vital to the growth and development of the region. In Jamaica in particular, we have experienced a surge in demand for home ownership solutions from the diaspora in the face of uncertainties in adopted home countries, most in which one or two. The Jamaican government is set to deploy up to $10 million in the rebuilding of areas affected by Hurricane Melissa, and has also indicated the intention to undertake a wider modernization and development program. This represents almost 50% of GDP, to put it in context. So this is expenditure of 50% of our GDP in a very short window. At JMMB, we therefore expect the following: heavy demand for engineers and artisans in an economy that was enjoying almost full employment leading up to hurricane and was already reporting a shortage of skilled workers. Continued growth in key sectors such as SME, construction, housing, and export-oriented services. Greater demand for financial solutions, a renewed interest among clients in long-term planning and wealth building, and increased opportunities for regional financial collaboration through access to opportunities across borders. Through our investment solutions, advisory capabilities, and educational efforts, we remain committed to helping more participants to enter and benefit from the wealth-building opportunities available in our financial systems. A strong, inclusive, and well-functioning capital market is essential to development, and we see our role as supporting that ecosystem every step of the way. A core part of our outlook for 2026 is the extent to which the SME segment, which is the segment with the greatest number of economic active participation through ownership and employment. It is imperative that they receive the support required to continue to fuel growth across our region. We have crafted purpose-built products and services to facilitate cross-border access to capital, as well as support of key conduits to cross-border commercial activities and country-agnostic financial services within the framework, of course, of multiple regulatory structures. Don't want to step on the toes of our regulators. This includes access to credit for SMEs, mortgages, home ownership solutions, and financing that supports productivity, innovation, and expansion. Our services include special facilities for green energy and production technology. We believe that when businesses and households thrive, the economy thrives. Across the group, we're investing in technology, and our digital strategy is heavily focused on inclusion. We have benefited from the earlier presentations at the same conference on the advancement of technology, and JMB will increase investment in AI and other technologies in our effort to support access to financial services, even in the most remote communities. At JMB, digital transformation is not about replacing human connection, it's about enhancing it. Our goal is to give clients intuitive digital tools for the everyday moments and meaningful in-person advice for the life-changing ones. This hybrid approach is central to our strategy for 2026 and beyond. Having identified environmental challenges, we will continue our journey of embedding ESG in everything we do, through our policies and programs, both for our operations and those of the clients we serve. As we look towards 2026 and beyond, our priorities at JMB Group remain focused on deepening the relationships that have always anchored our work, ensuring that every client feels supported, understood, and empowered to achieve their goals. We will continue to strengthen the connection across banking, investments, and insurance offerings, creating a more seamless and holistic financial experience for the individuals and businesses that we serve. At JMB Group, our future is rooted in possibility, but grounded in purpose. The financial world will continue to change, but our commitment remains the same. To be a partner you can trust, to support the dreams that matter most, and to help build a future of resilience, opportunity, and shared prosperity for Jamaica and the region. Thank you.
One time I just hope you're all making notes to ask the questions as they come along. Mr. Sassapasta is here now to do his own presentation on phosphate.
Always a pleasure to stand and to share some of the ideas that we are standing on at phosphate. 3 words: 1, connections, committee, winning. We see what has happened in the country as something that is requiring us to remain and become closer to the hurting customers. We have traveled the country with our teams, and we have listened to the hurt that the customers in the West especially have faced and are facing, and we have decided at Phosphate that these 3 pillars are what we're going to be executing this year and the year to come. So connecting with our customers, meaning we sit with them and we understand by listening to what their pain points are, and we come back to our boardrooms and we determine by making programs in how we are going to be helping them through this terrible time that they are going through. Look, a lot of customers that we serve fall in the category that is really the investment funds are coming into the country and moving in those directions. Unlike some industries where you find some kind of destination has taken place, the phosphate company has been standing on 4 pillars. 1 is the manufacturing of PVC pipes and conduits in the country, the supply of electrical for all of your construction and rebuilding, your energy, which is the buzzword now in the country and across the globe, and also our lighting experience that we give to people. So these 4 categories that we bring to the market are all in tremendous demand. And this is what we have gleaned from the interactions that we have had with our customers. And so we have sat and we have worked and will continue to work on strategies to help them through this tough period that they are going through. As a company, we also got some scare when we came to the Nelson Delta, because we have 3 locations in Montego Bay, and we were a little bit stretched, and we thank God for that. But our people were mostly affected, and we did all we could to support them with us. When electricity was not available, we gave them power. You know how we did that? Solar power. We just take care of our people because we wanted not only to connect with the customers, but we as a company want to connect with each other and help each other through. And so that is what we are doing on the connection side. Committing. We know that nothing is achieved by simple action. It takes hard, dedicated, and tenacious work to get anything that you want in life. And so, last year, we didn't know that Nelson was going to happen. But last year, May, we decided to engage in an integration of some sorts by going into a hardware distribution business. And what has happened since last year, the 28th of October, we know. And right now, the scale at which the demand is hitting us is unbelievable. And so we see that our commitment to encourage a positive development and build back is something that we are, I want to say reaping, but we are seeing that we need to continue on this path. And so what was just said earlier falls in line with what we see as a build back, whether you're going to be building roads, whether you're going to be building communities, cities, whether you're going to be building churches, schools, we have the solution in what we offer to the market at Ostrich. And the final one, so we have done connections, we have done committing, and we are going to be winning. If we do these 2 right, we will be winning. And it's not only we as a company, but we will be winning as a country. Because here it is. We have decided, based on what we have seen in the market, that the time has come for us to to form what you call it, a special company to deal with the energy demand that is now facing us. Solar company. So at present, we have formed at Ostrich this company called MSC, Middlesex Solar Energy, and that company stands ready to serve and to help the country and the individuals to win as we go forward. The funds that are being placed in the country will only benefit the country. We have said to the powers that be, if we are part of the rebuilding process. And we at Ostrich, we stand ready to be a part of that building back of the country of Jamaica. And so we are clearly ready and willing to be connected, we are committed, and we are going to be winning. Thank you.
All right, we're going to move for our question and answer session, right? We're inviting questions from the floor. I'm just going to ask, when the questions are being asked, once again, I'm just trying to find where the microphones are. Okay. All right, we're going to start with our question for Kalila in front as the first question. And before you ask the question, for the panelists, we're going to be using these microphones. Just turn them on, and as the instructor, just hold the mic as close as possible to your mouth so that the audio can be captured as best as possible.
Hi, good morning. Kalila Enriquez Reynolds, Money Media. This question is for our financial sector participants, analysts, and Jerome. And Frank, maybe you too, you want to weigh in on the issue GK as well as with financial services. On Tuesday, at the opening ceremony, the Prime Minister hinted at the modernization of regulations for the financial sector, and he kind of approached it in the fact that these regulations were crafted during the FinStat era. And so our situation today is a lot different. We don't need those same stringent regulations. However, in a post-SSL Jamaica, what type of regulations do we need to re-inspire investor confidence?
You can go ahead. Each of us.
Absolutely. So from what we have sight of, and the broker-dealer community, at least who we're addressing today, it looks like the adoption of Basel III. It looks like the adoption of Twin Peaks regulation, where essentially the Bank of Jamaica pretty much champions regulation across the industry, so both banking and the broker-dealer. And the Minister of Finance yesterday would have also hinted that there is a willingness by the government to look at pension regulation in terms of modifying pension regulations. So, for example, it can take more exposure to infrastructure. The Honorable Minister also spoke about her desire to put a more regulatory framework, a policy framework, where receivables factoring is concerned for receivables from the government and arms of the government. So I think the accommodative stance, Kalila, is one where we realize that the infrastructure asset has been one of the best performing assets in Jamaica. I think that new products will come to market, which will create more movement of money, quick access to liquidity, greater churn and turnover. But on the safety side, the adoption of Basel III and Twin Peaks, I would be very surprised if there is any change of direction where that's concerned.
Jerome, want to take on as well? To add anything?
Okay, thanks, Angus. The only thing I'd say is that it's a little unfortunate that an event, I've been around a long time, people at my company are tired of hearing me say that, but I was around in the 90s, I was around in the 2000s, and it's unfortunate that not systemically important company, a very small company, had challenges that more or less stain the entire industry. It's unfortunate that by asset, it is almost insignificant in relation to the total funds under management by Jamaican institutions. So every time I hear persons referring to that event as an indication or something that should be helping to formulate policy, I say it's a little unfortunate. When you look at the facts that have been revealed in that particular case, it did not have anything to do with regulations or the strength or oversight. What we had was, things that slipped through the crack, and I'm speaking only from what is available to the public. I have no inside information. So, what I say to yourself, Kalila, and the Jamaican public, think about how insignificant that institution, think about the billions of dollars under management that you have placed and you have given in trust to the many institutions across Jamaica, and how well they have managed and have been stewards of your funds. So I'll go back to the shifting in regulations. It is true that the regulations are crafted around the protection and the protecting, of course, depositors and investors. If you look at from the capital adequacy structure, where financial institutions are required to park capital in the event of a fallout, when you look at deposit insurance, and then you look at the reserve requirement, when you put everything together and the new regulations around building resilience, the investment and banking public is almost over-insulated against a fallout in the financial sector. And the good thing is that all of the cost of all of the things I just mentioned, that cost is picked up by the banks and the financial institutions.
But of course, it's passed on to your customers, right?
No, it would be very difficult to do so.
All right, Frank, you want to take it?
I think, Jerome and Angus handled it very well. I would only say that we do live in a very dynamic world, and the situation Jamaica is in today is far different from 30 years ago. So I do think it is time for us to review the regulations. And so I think the Prime Minister's approach makes a lot of sense. It's not to weaken, but it is to make sure that they are fit for purpose in the current environment. And I think that with that mindset, if we're not looking to weaken, but make sure it's fit for purpose, then I think we're on the right track.
All right, any other question from the floor? All right, maybe it's here, but while the microphone comes. Oh, all right. Just identify yourself, don't make a statement, just get to the question.
Thank you. My name is John Stewart, and this is a question really for Mr. Young. All right? So, Mr. Young, point you made in your presentation that really stuck with me was the evolution or this change in framework of balance sheets, right? Now, in terms of that change, especially when it comes to things like equity needs to reduce risk or debt refinancing, as well as merger and acquisition strategies, what opportunities do you really see presenting themselves, especially in terms of capital market professionals, particularly if they're early in their careers, like you mentioned?
So the regulations and the way the industry is moving towards these regulations, I would have said that the balance sheet construct would look more scientific going forward. What I meant by that is that it's going to force a discipline in the pricing of risk. You're going to have to justify why you're putting this on your balance sheet, the capital charge that it's going to attract. How do you reward yourself for that capital charge? So the regulations force that disciplined approach. And when the market goes towards that, people, in Jamaica, in Trinidad, sometimes, transactions happen outside of terms and conditions that they fundamentally should because of other inefficiencies like excess liquidity and other inefficiencies that drive things that are less fundamental in nature and more market driven. So I think that when the regulations come into play, it will be more fundamentally driven and less market driven.
All right, there was a hand over here. All right, okay.
Hello.
After you, then we come to this young woman there, but go ahead, since you're
Hi, so my name is Enrique McLaughlin. I study finance in New York City, and also I consider myself a budding entrepreneur. So my question is mainly about, I think Mr. Jerome and Mr. Young, they really spoke about banks wanting to improve operational efficiency through technological investment. How open are banks to financing young entrepreneurs through different schemes, and what process would we look forward to in the sense of technological investment? Would it be investment banking or any sorts?
Okay, so what I'll say is that there are, based on the risk framework of the financial sector, if we look at the entire gamut end-to-end and the various structures, the Development Bank of Jamaica has provided support for entrepreneurship through their venture capital fund.
So depending on the source of funding, so banks typically are lending out savings, monies that people place on savings. So they are a little more risk averse when it is related to like startups. But then you have investment companies that can raise capital from persons who are willing to invest in these startups. And then you have the government-backed agencies like the DBJ, and the DBJ has a whole slew of funds that are structured around entrepreneurship, venture capital, and supporting the real economy. So I'd say speak with your financial institution, ask about the various products and services that are available, and if it is not available at the institution, it is available through the institution in support of the DBJ.
All right, I'm just going to the microphone to this, to just a little quicker.
Thank you. Good morning, everyone. I'm CJAS from Mr. Shopper JA. My question is not so much finance related, but is more people centric. So my question is to Mr. Frank James and Mr. Foster. So Frank, you would have mentioned in your presentation about things that can be changed and can't be changed. So one of those, of course, is what we just went through in terms of Hurricane Melissa. My question to you, based on, of course, your company with hundreds, if not thousands of employees, in going through Melissa that we just went through, what are some of the things that you have in place in terms from a mental health perspective to help persons recover from what, especially for Gen Z as well, that experienced anything like this before? And for Mr. Foster, you mentioned that both yourself and your team would have traveled Jamaica, especially in the western end, and collected information and went back to the boardroom to look at programs and strategies. Are you able to say what are some of these programs that you'll be using to assist your customers?
Thanks for your question. Appreciate it. The number one priority coming out of Melissa for us at Grace Kennedy was our people. Of course, in the immediate aftermath, the first thing is to make sure that we could account for all our people. And we have 681 people in the sides of the island that got impacted, and we're able to account for all 681. It was not an easy feat given the communication systems that were down. But once that had happened, of course, the very immediate need after that was to make sure that their physical situation was okay. So arranging housing, accommodation for persons who didn't, and then of course the support through care packages, etc. But very importantly is the point that you have raised, which is the mental health of the team. I went around the island in the immediate days after the hurricane, and I was very moved by the fact that the teams were coming out immediately, even though when you spoke to them, they were going through serious trauma. Speaking to them individually, the experiences they had would traumatize any one of us, even people in Kingston who had relatives outside and were worried about them. And so what have we done about that? Counseling was an immediate response to the team. The leadership being on the ground and connecting with the people, because the people needed to feel their leaders and know that they cared. You know, I can tell you a lot of moving stories, but I won't get into that right now. But you are spot on, and it is not just while it comes initially from a we care perspective, which is Grace's mantra. The truth is it also for the hard-nosed business financial people in here has a very direct effect on productivity. And so if we don't get that right, then we're not going to get our country back up and running. So taking care of mental health, key priority, and it's something we're actively working on. Yeah, and for the question that was directed to me, our listening tour brought us very close and personal to most of the customers that we deal with in that region. What we have found is that the customers, they have a resilience that was unbelievable, and they also didn't want handouts. What they wanted is for their suppliers to understand that they didn't want to be all over the place searching for build-back products that they want to do their businesses. They didn't want to be going to to 4 or 5 different suppliers. So what we have designed for them is what we call a business growth strategy, where we look at for example, the top 20 products that they carry and they need. And we recognize that most of those, we do supply them. So we have designed a footprint that we will be in their space and offering these to them. Some of them we will give a little bit more time to return to us the funds, and we will develop and strengthen that relationship as we go forward. So that's one of the strategies that we are using, this business growth strategy, to work with our customers who are talking to us.
All right, any other questions from the floor? No,
Hi, good morning. Good morning, my name is Janelle Edwards, real estate agent with CJAS James. Mr. Young, Mr. James, both of you spoke a little bit about the framework of development that is going towards agriculture. And it's one thing that Melissa showcases, how still fragile the agricultural industry is here in Jamaica. So my question is beyond it being just a national risk, what practical steps can financial institutions and listed companies take to mobilize capital into scalable, climate-resistant agriculture, particularly in areas such as storage, processing, and technology, in order to reduce the dependence on imports?
That's all I have.
I was saying me, but I heard financing being your question. I'll speak about agriculture. So it's a very important point, because food security is becoming more and more important for us as a nation. And when you look at the way our agricultural sector is established, it really is built on the back of small farmers, which are a very important part of our society and how we operate. And they're a very important part of my supply chain at Grace Kennedy. Now, how have we dealt with the challenge of the fact that small farmers really don't have huge access to capital, right? And therefore aren't able to operate under these kind of climate smart processes. It actually came out of a public-private partnership. So we partnered with the government and we established a 100-acre agro-park. And that 100-acre agro-park, we are not in farming, but we have then sublet in small 5-acre lots to small farmers. But when you operate on that agro-park, there are certain standards that must be abided by. So we support in making sure the infrastructure is in place, and then giving our team goes and goes to places like Costa Rica, etc., where we have seen this and bring those practices back. Now, 100 acres in the scheme of things is small for us because we have a much larger farmer network. So we have dedicated a few acres at the agro park that test best practices, and then we start to pass those on to small farmers outside. Where I'm going with this is I think Jamaica needs to develop this type of mother farm approach, where you have larger, more well-capitalized persons going into agriculture, not to replace the small farmers, but really to set up this type of what we call a mother farm, or in our case, the agri-park, which then has the type of climate-smart infrastructure in place that the small farmers can operate through, and give the small farmers a clear route to market, because all our farmers have a direct access to us to be able to then sell their product. So I'm just going to tell you how to fund that, to fund the agri-park, but that's what I would say about climate-smart agriculture.
I'm going to just throw out a question German one to test their own. I'm going to spoke about the regulatory changes, the special resolution regime, the Twin Peaks, the Basel III, and all that. But more than a decade now, we have had this asset tax on financial institutions, which was supposed to be temporary, but seems to become permanent. What is happening there from your perspective with all these new regulations coming in with that element?
I see you have fans in the audience. Was he placed in the audience? Well, I mean, let me see if I can walk through the raindrops here. We've had the Minister of Finance, who has oversight, is very open to discussions. All the multilaterals, as well as the government, agree that it should not be in place. And so it is an ongoing conversation. It is a conversation that we keep front and center. In fact, we had a meeting with a minister who is totally unrelated, well, two ministers, Minister Charles and Minister Marks, and we raised it because, you know, people are looking towards the banks to deliver certain things. For example, the $10 billion that the government intends to spend, it needs to be distributed. And some of these spaces are really deep rural places, sparsely populated. And so they don't have ATMs, they don't have banking. So people are looking towards the sector to provide solutions and to provide support in that regard. But it is going to come at a cost. And we're saying to the government, when you look at the fact that income taxes went down to 25%, and they're keeping it at 33 and 34 for financial institutions, as well as the asset tax, and all costs related with the new regulations, you know, let's not kill the goose that lays the golden egg. Because the more you pile on, if you look at, and we have a young guy who says he's a bit of a financial wizard, just pull out any financial company, just pull down the statement from the JSE and look at the assets, look at the capital at risk, look at the assets that they've put at risk, and then look at the returns, because that's what we always hear. Banks make a lot of money, but make a lot of money relative to what? I was looking at NCB's book just last week. We had a listing of all the assets. They have close to $1 trillion at risk. And they make, like, I believe, the best year was about $48 billion. 48 is a big number in a vacuum. But if I break it down to the simplest, a guy with 1 bus at risk versus a guy with 10 buses at risk, the net profit is going to be greater for the guy with 10 buses. It doesn't mean he's making a lot of money on the backs of anybody. What it means is that he has taken tremendous risk in a country like Jamaica to deliver to shareholders and to provide services for clients. And so we believe strongly that, you know, the time to have an open, frank discussion about this asset tax. I mean, it's long gone, and, you know, we will not give up on continued conversation.
But does it discourage the financial sector from investing more, since every time you add to asset base, it will be taxed more?
It does, because that tax is also levied on our loan books. So if we grow our loan book in support of the real sector, there's a tax applied. Even the distribution that we discussed, if we put an ATM in Cataloopa, St. Elizabeth, it is an asset on our books, and there's a charge on it. And what I'd say, especially to the PSOG and other business leaders, you should be behind this. Because if they are not removing the asset tax from the financial sector, will they extend it to other sectors? Will Frank need to pay asset tax on his inventory and his warehouse? Will our businesses, will our busman need to pay an asset tax on the bus that he owns? So it's right now, as His Majesty Emperor Haile Selassie said in 1966, today it's me, tomorrow it might be you.
All right, I'm not going to ask another question. I've been given a wrap-up signal, but I've also been given a leeway to get 2 more questions. I'm just going to ask those 2 people to be very quick because we're out of time.
Hello, morning everyone. Fernando from PUG. What are the key hurdles that the deals transaction market is currently facing? And how do you think can the region position itself to attract more foreign direct investments?
So this is what we try to address on Tuesday nights, right? When we create a regulatory regime that forces, everything to be more scientific, I'm not saying that's a bad thing, then you have to justify the return on your risk in a regulatory manner. It's going to, and then you have the cost of these new regulations. It's going to raise the bar where your minimum hurdle rate of investment is concerned. So what I was trying to say was that we're in a global village, capital can be deployed anywhere in the world, so why would somebody deploy it here? Where we're subject to hurricanes, where, the geopolitical risk came into the room. Funny about asset tax, right? The Trinidadians just introduced an asset tax, so for the first time. So that they took that page out of Jamaica's book. So we need collectively, we need to create an ecosystem here in Jamaica and the region that attracts capital, and you can only do that if you can compensate people for the risk and for the cost of deploying that capital in the region. So we need to create that environment that would attract, that make us internationally investable.
All right, the last question.
Good morning, everyone. Gabriel Zari. My question is to Jerome Smalley. You had mentioned during your speech that technology is the focus and you will have increased investment in AI, and you also mentioned your ECGs. However, AI consumes a quarter, and in order to cool the data centers, are you able to elaborate more on how JMLB will create a balance between your corporate social responsibility and the AI investment, considering Jamaica is no stranger to water challenges?
And that was not just water, but also energy.
Okay, that's an excellent question. And are you related to Malcolm Marshall? You're too young to know who he is. He was one of the best classical owners who ever represented the West Indies. But let me say that JMLB generally, whenever we take on a partner to provide technology or any type of support, we are very careful in assessing and applying ESG to that company as well, in deciding whether or not we partner with them. I indicated in my presentation that ESG, we apply it to ourselves in our operation, we apply it to our partners, and we apply it to our clients. Cesar can tell you that, we're very strict around it. So it's an excellent question, and it will give us something to think about as we move forward and as we look to partner with these technology providers. Thank you very much for that question.
All right, I really have to cut. I've gone over the time, but could I squeeze it in? Okay, the answer is no. We have to move on. All right, but thank you all for your participation, and you can probably just reach them and answer the question outside of the big audience. But I thank you all for your participation this morning, and we are come to the end, and we just want to say thanks again to Fran, and Jerome, and Cecil.
Oh, that's what I call a heavyweight session, right? Fantastic. There's so many potent ideas that came out of that panel discussion. I don't even know where to begin. But, Cecil said one thing, and I thought, what a magnificent idea that is. He mentioned something called a listening tour. A listening tour. Listen to your clients, listen to your customers. They'll tell you what you need to do. Okay, so again, another round of applause. What do you want to listen? It's laid after a great start. Now, session 2 is titled Capital for All, Breaking Structural and Regulatory Barriers. Now, that to me remains one of the most critical drivers of inclusive growth. This session will examine how we remove barriers and expand opportunity across our markets, and our moderator is Chairman of Caribbean University Media Advisory Board. Please welcome Nigel Coke.
Thank you very much for a brief introduction to the segment of presentation, which allows me just to introduce the person who will do the presentation. The person down to do the presentation is Mrs. Stacey Tate, and she's the Chief Investment Officer for NCB Capital Markets Limited, a wholly owned subsidiary of the National Commercial Bank. Over 15 years of experience in portfolio management, risk management, fund management, and corporate finance. She has built a distinguished career in managing portfolios across the Caribbean, including Jamaica, Trinidad, Barbados, and the Cayman Islands. She currently serves as first Vice President of the Jamaica Securities Dealers Association, where she advocates for the development and improvement of industry standards, collaborate with regulators to strengthen investor protection, and promotes transparency, integrity with Jamaica's security market. Previously, she served as second vice president of the CJAS. She's a CFA and also a CAIA. For those who know, chartered financial analyst and also a chartered alternative investment analyst. Please welcome to this podium Mrs. Stacey Tate.
Good morning, ladies and gentlemen, all protocols observed. Thanks for having me this morning. So I will be speaking to you on capital for all, breaking structural and regulatory barriers. I want to give some context about my theme. What do I mean by capital for all? There is this myth that the capital markets is only for a certain segment, large, big, established companies. Well, the capital markets is for all. It's for investors. It's for micro firms. You've been hearing a lot throughout the conference about a micro exchange. It's for small businesses, it's for medium-sized businesses, and it is also for well-established businesses. The capital markets needs to be inclusive, more inclusive. The very fact that I'm standing here today and addressing you is because we have a capital markets. We have capital markets across the regions that work, but notwithstanding that, we can make them stronger. From the questions I hear coming from the audience, the things that are being said, there is space for significant improvement, and I'm going to take you through that. Now, given the broader context already, we'll dovetail a little bit more into that. We look at fundraising challenges, and I've heard questions over there, and then some of the solutions that we have seen today, and then we'll look at the challenges and then the future solutions that we need to look to as our North Star. So let's get started. Why fundraising via the capital markets actually matters? Now, why does it matter? It matters because it helps corporates to build resilience, and it does so because it provides robust capital structures for them. Now, it introduces a diverse investor base. Remember I said earlier that the capital markets is for all investors? Well, I'm talking about the investors who are still in school. I'm talking about the investors who have just graduated, the investors who are planning to buy that first home, the investors who are investing for retirement, and plain and simple, the people who want to get rich. The capital markets is for everybody. Now, providing that diverse investor base to corporates, what it helps us to do is to strengthen the company's ability to withstand shocks, access better financing term, and also to grow even where there may be liquidity challenges in other segments of the funding market. It also strengthens economic resilience, the very broad topic of this conference that we're at today. And it does so because it converts domestic savings to capital for businesses that need it, and they need it for growth and the infrastructure. We have been talking a lot about the capital of Venezuela and the importance of building infrastructure. This is where the capital markets is going to be significantly important to achieve this. It's also important because it builds financial system resilience, which we need and we have, but we have to protect. And that's because it retains domestic savings rather than relying excessively on external financing that can prove volatile on material shocks. Now, what happens when we don't have it? Or what happens when it's underdeveloped? Well, first, it lowers economic growth, the very thing that all of us want, more and more growth. And it does so because businesses cannot reliably access long-term capital, they may underinvest. So if they want to do more and they can only access a portion that's underinvested, that's suboptimal. It also results in capital flight and savings leakage, and it does so because capital outflows will happen if investors can't find a place to put their money to get that opportunity in terms of a return. And then lastly, increased vulnerability. So when the markets are low in liquidity, small in size, limited instruments, and weak regulatory frameworks, what it will do is that it will result in economic shocks, volatility, in financial assets pricing. So we know why it's important, we know what it looks like when it doesn't work properly or efficiently, and most importantly, we need to stop and pause. We need to stop and pause and reflect on the successes that we have had today. I'm standing here at the 21st sitting of the Jamaica Stock Exchange conference because we have made significant improvements. What are some of those? Well, we've seen a growth in the retail presence where improved market conduct has invited more investors to come to the capital market. A stronger retail presence, and this is especially noted in Jamaica. We have seen the expansion in the collateral policy reforms, regulatory reforms that have transformed how corporate securities get issued and used in the market. We have seen a broad-based reform in areas such as digital transformation and access, and then also to other regulatory reforms like the Jamaica Stock Exchange junior market and in Trinidad the SME market. Now, when I say digital transformation access, it's important to pause to tell you what I mean. We need to create seamless access, and a significant contribution to that was the Go IPO platform. And the Go IPO platform, what it did, it allowed investors from anywhere in the world, in your bed, whichever part of the room you were in, to apply to an investment in an initial public offer, IPO, whatever it is, in an instant. That was significant. And of course, we saw significant growth in the recognition of carrier risk ratings. We saw where corporates started to engage and get corporate ratings. So we've done some good work. Notwithstanding the good work that we have done, there are structural challenges that we still need to address today. What are some of those? Well, limited education and understanding from the part of retail investors. Typically, retail investors now, they process risks largely from the standpoint of, is it safe? It's not government, it's not safe. And or they just think of risk in binary terms, safe or risky. Now, we need to step away from that because what it creates is a hesitancy of those investors to enter the capital markets. It also then reduces the demand for certain products even when they're there because they're not properly addressing the risk or calculating the risk. What does that result in? It results in low retail investor participation rates in our region. Let's look at a few examples. So I'll start with Trinidad and Tobago. Trinidad and Tobago has one of the lowest retail participation. Barbados is similarly constrained, retail participation is low. In fact, if you recall yesterday, the head of the Barbados Stock Exchange actually raised this as a challenge that there is not enough activity on the market. And then of course we think of Jamaica's continuous progress. We have made significant progress in this area in terms of retail investors. And I'd like to quote some stats here. When we look back at an interview that Dr. Street Forrest did some time ago, she mentioned late last year, she mentioned that there was significant growth in the account space for the Jamaica Stock Exchange, where there were about 380,000 accounts. When you do 380,000 accounts as a percentage of Jamaica's population, that's around 14% of persons having equity accounts to trade. That's significant. Notwithstanding, there is significant improvement for us to do and work to do, for us to build that. And then of course there's work to do in corporate bonds and trading of corporate bonds. I'm sorry, I just realized we weren't following the IOS team. But yes, there is significant work to do on the corporate bonds and the trading of corporate bonds on the secondary market. Now, let's look at our robust ratings culture. We also suffer from this in Jamaica. In Jamaica, we don't have a culture that is focused on risk ratings. However, in the global international market, credit ratings are the backbones of decision and investor confidence. Now, I want to say this to you. A vibrant ratings culture or a credit rating is not simply about labeling a security. It is far more than that. It is ongoing flow of information and independent credit assessment that builds the confidence of the market. Confidence of the market to reduce thoughts about skepticism and why they shouldn't enter. And then of course, confidence in knowing that you can secure long-term pricing that is more economical because the market has grown to trust you. Now, of course, we have seen some significant improvement in the ratings culture in Jamaica, where we see quite a few companies coming up and they're seeking to get rated. And there has been some improvements in Jamaica, but there's still more work to do. Now, when we look at other islands like Trinidad and Tobago, it's still viewed as optional to get a credit rating. And then, of course, there's Barbados, where very few corporate issuances take place. And because very few take place, our ratings culture is not present at all. Last but not least, in terms of structural challenges that we face in the capital markets, is a weak secondary market ecosystem. You have heard this multiple times through multiple presentations that the secondary market trading is a challenge, the depth of the market. Now, it's very important that when investors step to the capital markets, they need to be able to have confidence that they can actually buy and sell their securities when they need to, because you need liquidity. When you don't have that, then investors are hesitant to enter the markets, and then corporate issuers, they struggle to attract the interest because there is this challenge. So this is something that is a structural barrier that we must address as we seek to deepen our capital markets. Again, when we think about the secondary market ecosystem and just live examples, when we think about Jamaica, we see more strength in terms of the equities market, and we also see transactions in corporate fixed income. But when we think about the corporate fixed income experience in Jamaica, they're largely over the counter. We have established platforms in Jamaica to be able to help us with this, like the Jamaica Stock Exchange private market platform. But the challenge that we have with it is that not many persons have used it, not many transactions have happened, so it's underutilized and we're not reaping the value of it. Then of course we think about Trinidad that struggles with secondary market liquidity and also Barbados. Sometimes it's very difficult in some of these territories just to get a quote on security. And to have an active secondary market, you need to actually have active buy and sell quotes being transacted in the market. Now, last but not least, cultural resistance to transparency. This is the need for corporates to keep the information and keep the information private. Now, this is particularly rooted in Trinidad and Barbados, and we see it here in Jamaica, and we also saw it when we were launching the junior market, where persons were afraid of the reporting culture. They were afraid of the work that it would take to actually report on the stock exchange. Well, the reality of it is that our regional capital markets cannot deepen unless our business evolves towards greater openness, accountability, and investor-friendly communication so that our investors can actually understand what they're investing in when they come to the capital markets. Now, let's move to our regulatory or statutory challenges that exist. And I'll take you through a few of the territories within the region as I have been doing. So Trinidad and legal. So the challenges there are largely limited offering restrictions, concentration restrictions, lengthy approval processes that may reduce speed and efficiency. And I'd like to break this down a little bit. Now, when you look at the Securities Act in Trinidad, it limits the number of persons that can participate in a private placement. So when you have a private placement security, it limits the number participating in that issue to 35 persons. Then when we think of some of the other restrictions, we think about the bylaws of 2020 for collective investment schemes. There are restrictions in the amount you can invest in government securities. You have restrictions also on the exposure to any one single issuer. Then on top of that, you are restricted to the amount or the percent that you can participate in one offer. So when an offer comes out, there's a regulation that says that you can only do up to a certain percent, which is 10%. And then of course, when I talk about the approval processes of public issuances, it's something that we experience across the board. The idea is that public issuances, the speed to market is important. Therefore, the challenge that exists in getting the approval process or how extensive the process may be is something that we need to look at because it does affect time to market. Let's look at Barbados and the Eastern Caribbean. We face high compliance costs after the Kiko collapse. Stringent rules make fundraising very expensive, and then of course, lengthy approval process that I've spoken to before. On the opening night, and I think I heard it over here in the question and answer segment, we have to realize that regulations after a crisis is absolutely critical to restore stability. It is a must. However, after that is done, we have to move the regulations forward to ensure that there is more growth, more meaningful growth. Now, after post-crisis of Kiko, the stringent rules could include something as simple as a basic repurchase model that we have come to know as something run-of-the-mill. If you're doing that within the Eastern Caribbean, you have to register a prospectus to do that. That's significant. For those of you who are preparers of prospectus, a lengthy document, it's very costly because you have to get legal, you have to spend the time to do it, there are multiple reviews, and then it goes through the process. That's an example of how expensive it makes fundraising, which impacts the capital markets. And then of course, I touched on this a little earlier, but I wanted to show the contrast. In Barbados, private issuances are restricted to 50 persons per issue. Now let's think of this, you need to raise 50 million US, and you can only raise it from 50 persons. How inclusive is that? You could be raising that 50 million US and including more persons in the market. So again, when we think of it here in Jamaica, we actually don't have a restriction on the number of participants in an issue. But there are guidelines across all the countries in the region that says who are eligible investors. Now, let's turn our attention to our home territory, Jamaica. Some of the things that we need to look at in terms of this regulatory challenges are difference in regulatory requirements, investor restrictions, the approval process, but also to allocation inefficiencies. Let's talk through a few. There are disparities in the capital charges and market risk weightings between corporate bonds and loans of similar risk exposure. So what it means is that there's an additional charge to capital that some investments face, even though the risk profile may be the very same risk profile, only because of how it is categorized as a security as opposed to not being a security. And then of course we have where some financial institutions are constrained by a 40% group exposure limit, and then others like the securities player, they have a 25% group exposure limit. Now what does that mean? That means that when you are putting your balance sheet to work to invest, you can't invest more than 25% of your balance sheet, your capital, to a group of collective issuers. Why does that matter? It matters because if you are seeking long-term capital from the capital markets, you can't optimize because we have a lower limit. So it's important that we address that. And then of course there is the pension funds that have a 10% group exposure and a reduced 5% limit for total funds that are exposed to private equity, private credit. Now, why does that matter? It matters because, remember earlier we spoke about the needs for infrastructure, how the capital markets can help, how the capital markets channel savings into productive means. The law limits then reduces what we can do, the invested capital that can be mobilized in this channel. And when we think of the international experience, when we think of the international experience, the allocation is actually quite different. You have a larger allocation to private credit and non-traditional type investments to foster long-term growth. Then of course, we think about the cumulative risk weighting for investing in our own GOG, USD, international bonds. It's 100% risk weighting versus 0% for the local. And I want to pause right here because I want you to first understand that as a profession, I am foremost for risk management. So the advocacy that I'm doing here today is not against the backdrop of not maintaining proper risk management. And then, of course, we have regulatory restrictions on foreign currency denominated issuances. It is easier for banks to make US dollar loans to clients seeking funding than it is for securities dealers to offer corporate bonds to clients seeking and raising US dollars. So that's something that we will need to look at in terms of dealing with capital markets. So now that I have looked at the challenges, both structural and regulatory, I want to take you through what the North Star looks like. What are some of the solutions that we can look at? So firstly, we need to incentivize credit ratings. We need to develop our credit ratings culture. For us to do that, one suggestion is a differentiated capital charge for rated exposures. So what it does is that if you're higher or the higher rated you are, your capital charge is lower. That incentivizes customers and issuers and the persons investing in them to press for credit ratings. In addition to that, we think it is good to align credit ratings to companies' corporate and social responsibilities. Why? It is your corporate and social responsibility to build a confident market, a deep market. And if we all take pride in that, it will help us build a stronger capital market. And then of course, there is need to improve financial literacy. Now, financial literacy has improved significantly. Now, it is important for us to improve financial journalism. We will have seen significant improvements over the last 8 to 10 years. And I must say, I see some faces in here and faces that I have engaged with who are very responsible at doing this. Responsible financial journalism is important to protect and to develop the confidence of our capital markets. However, even though the majority of our financial journalism is very responsible, there are a few persons who don't take it very seriously. And my call to action for you is to ensure that you behave responsibly when engaging in financial journalism. That's because the faces in this room, they look to you for guidance, for confidence. You must be open as a journalist. You must be balanced and you must be responsible because the market depends upon you. And then of course, we want to have continuous education that penetrates the secondary and tertiary students. When I look around the room, I see a lot of students, and it is important that by the time our students get to the working world and they're fully ready to deploy even more money into investing, they have a good idea of risk-adjusted returns, how to process and make those decisions. And then of course, we want to improve the market transparency and price discovery. How do we do that? Well, let's improve as companies our reporting and transparency and simplicity in language so the investors can understand it. And again, that's where our financial journalism helps because it breaks down complex matters. And then also too, we want to ensure that there are greater issuer incentives to have issuers listed on platforms, such as the Jamaica Stock Exchange private platform. It is important for us to get more mileage out of this platform to bring transparency to the price discovery of private issued securities that are trading in the market. Now let's look at the solutions for the regulatory challenges that we have. Well, firstly, we need to reduce the regulatory arbitrage or differences that exist. We need to align capital treatment across risk exposures. and that is the weightings of the, that I was spoken to about the market risk weightings. And then of course we want to prudently revisit restrictions on foreign currency issuances, and we want to align group exposures. We want to reform the pension funds and collective investment scheme limits. We want to revisit the limits for private sector issued security to mobilize more funding for the capital markets. But it's not just about mobilizing funding, it's about protecting and growing the pensions that we are investing on behalf of the persons. And then also it is for us to defer ISP participation to internal risk management protocols. So there are already guidelines that says who are eligible investors in these instruments. We don't need to then say the number, and then also, we also don't need to say that you cannot do more than X% in a particular issue. That can be determined by the portfolio managers. And then of course, we have other reform considerations. Those include reducing the 100% risk weighting that I spoke about. And I didn't say eliminate, I said reduce. That's what I'm putting out there. I want us to look at advancing regional market integration and cross-border issuances. This is important. By ourselves individually, we are small. Collectively, we are greater. Now, what that will do is that it will increase scale, the liquidity, and the market depth, and provide a broader investor base for the regional capital markets. And of course, we want to streamline regional approvals. So we want to simplify or shorten the approval process. Again, this does not mean that we have to reduce quality and standard. And then of course, we want to standardize requirements for processing. So it doesn't matter where you're processing in the region, it's the same. And then when we think about all of those things, I want to leave you with this call to action or contribution. When I say or contribution, I'm not just speaking about NCD capital markets contribution. I'm speaking about the contribution of each and every financial institution within the industry. Our contribution is to be thought leaders, advocates, and innovators. How do we do that? Well, we need to actively engage with regulators to convey challenges and objectives to collaborate on industry solutions. Me standing here today at the 21st sitting, addressing you today, I am doing that today. We are doing that today. Regulators are seated in this room, they're listening to us. And it goes beyond today, it goes beyond this room. We need to use the voice of the associations that represent the various institutions within the industry. So you have the Jamaica Bankers Association, you have the Jamaica Securities Dealers Association, you have the Insurance Association of Jamaica. These are powerful voices and they make us strong. In fact, I think it was in the Prime Minister's keynote address on the opening ceremony night, he cited, I believe, that one of the things that make us strong is the level of collaboration that we have across the private sector with the reform bodies. It's very important. And so I invite the other countries within the region to make sure that voice is being heard, utilize it to collaborate and form solutions to the challenges that we have within the region. Then I need us to devote significant time to seminars to enhance investors' understanding of risk-adjusted approaches. I know a lot of you, like me, we have a lot of work to do at the desk. But it is so important to participate in these conferences because it gives us the ability to nurture the young minds, to help investors to grow and to understand better the financial market. And of course, we need to leverage the successes in the respective jurisdictions to bring more sophisticated balance sheets to invest in strong projects within the region. Now, I want to herald the improvement, the significant improvement that I've seen in the last 8 to 10 years. There has been magnificent collaboration across the stock exchanges within the region and working on different solutions. And what I like about the collaboration that I've seen so far is that where they see that something works in one market, they don't try to recreate the wheel. They take it, they tweak it, because it doesn't fit exactly, but then they build on it and it makes them more efficient to look for the next opportunity. We need to keep doing more of that to make our region stronger. And then lastly, I see my 1 minute call, and I'm just about there. We are to use innovation and technology to create greater capital markets participation and access to investors. Now, if it is that it is seamless, the less friction something has is more that you're able to invite people to come along with you. We need to make and use digital technology to invite investors to be more present in the capital markets, and also to invite issuers to be more present in the capital markets in how they go about their issuances. And then that will take me to the end of the intention then, and then 1 minute marker. I hand over back to my moderators to facilitate questions and answers.
That was indeed an excellent presentation. Really excellent. And as the persons who have questions take their positions and get the mic, just one question here. Is it, you believe the capital market right across the region, are they collectively over-regulated or under-regulated for the most part?
If they are over-regulated or under-regulated, capital markets. So regulations serve different purposes. And I think broadly, our regulations have fostered a pretty safe environment across the region. And we have seen significant improvements, as I alluded to in my presentations. So I will not say to you that it's a broad brush that the markets are over-regulated. As you have heard in my address and also the questions of others in the audience, there are some areas where we need to look back at the regulations to see if they are still fit for purpose. It is important that we continuously do that assessment for fit for purpose, because as we grow, things change and we need to evolve because change is constant. So those are the areas that work will need to be done in, but I do not believe that it's a broad brush to say that we are over-regulated, because at different points in time, the regulations would have served different purposes that brought us to this point.
Question from the floor.
Hello, yes, there we go. Good morning once again. Kalila Enriquez Reynolds, Money Media. Excellent presentation, Stacey, and co-sign everything. But since you brought something up, let me take the opportunity to have a captive audience here to do some advocacy on behalf of my industry, which is media and content creators. You mentioned financial literacy and financial education. And yes, it is extremely important that that happens. So for media and content creators, we are here doing the work, helping to grow your client base. If I had a love everybody who said, Kalila, because I watched your program at Open Investment account and I started investing, I would be on an island sipping the coconut water somewhere right now. But my point is, my advocacy, my call to the room today is to please fund and support and sponsor the people who are doing this work, many times for free. I see a lot of them in the room. Learn, Grow, Invest is here. Renee, stand up. Limitless Podcast is here. Where are they? They're doing great work as well. So please support the content creators and the media, traditional as well, because media is in a very precarious position right now. Make sure that we get the funding to continuously provide the education that we need to do and to help to build your client base. Call me, 540-641, advertise on Money Media. Thank you.
Hi, I'm Keith Hollister, Jamaica Observer. I see you had a bunch of strategies, but what I understand you didn't fully address the issue of harmonization of the capital market across the region. For example, many of you may not know that there was a regional bankruptcy act that might have been useful in the collapse of Caribbean conglomerates in Trinidad if they had actually got around to finalizing it across the region a few decades ago, or a decade ago. So, how do you see NCB breaking those regional barriers, the same ones you're talking about? And because it seems to me that in the new world order, a regional capital market is even more essential than it previously was.
There's some hard truth in my response, Keith. And let me start here. We can continue to advocate the importance. And what I find with advocacy is that it's not instantaneous in the benefits that it delivers. And it will take some time to get us there. Because even our regional stock exchange, we've spoken about the matter so many different times. We've been trying to handle it for so long, and it has not come to fruition. It will take, as much as we collaborate, it will take a greater importance to focus on the region, to move that agenda forward. And I believe that things are shaping up nicely in terms of the collaboration, but it's going to take the collaborative effort some time to get us there. And the more they see the benefits, you said it was relevant before, and you said in the world that you're seeing now and the world that you're seeing in the future, it's even more relevant. It's going to take them some time to be able to come up, but we keep in the work that we do and what we put out there, we should not stop advocating. We should not let them forget how important it is so that they can keep it front in mind and demonstrate the benefits of it as users, as practitioners in the market, how it could actually unlock capital for them and for us. And what I find when typically you ask persons to do things, you have to show what is in it for them, and the more we continue to demonstrate how each and every one of us within the region can benefit, I think that will spur them further to move the agenda forward. But it has some delicate issues that they have to consider.
Good morning. My name is Amelia Lovelace. I'm from the University of Technology Jamaica Banking and Finance Seminar. And my question is, what advice do you have for upcoming investors like myself as well as others when it comes down to evaluating investments in uncertain or emerging markets where data may be limited or just unavailable in terms of risk expectations?
How do I prepare you? I want you to be a sponge. How about that? I want you to soak up every knowledge that you can. I want you to read widely. I want you to tap into clubs and associations at your school level that exposes you to investment and also to just thought processes. You will have access to some of those clubs. I think it's called the Investor Club. I can't remember the full name of it. But I know the UTech has a program where you have investors, and it's an investor club, and it represents a certain segment of the student population interested in that. And making use of those clubs or associations, they matter, because then you have persons who will come in, they will speak about their practical experience, and that helps you where information is not available. And then I say to you as students that you should seek a mentor. And for those of you who have a very keen interest in the financial market, then seek mentors. Today, use your networking opportunities. Do not leave here unless you find a mentor, somebody who you can utilize, because that also helps you. It helps you not just to supplement what it is that you are learning in theory, but it also gives you real-world applications and real-world scenarios that can help you in your own development. And read widely. I'm in the profession and I still have to read widely. And reading widely is important because then it exposes you to other jurisdictions, other markets, where things may be common in one but not in the other, but then understanding it in that market can help you to better appreciate principles that you can use to understand investments in other markets. So again, I want to close with my encouragement to be a sponge, find a mentor, and utilize the mentor very well.
Thank you very much, ladies and gentlemen. This is Stacey and Tate. Let us thank her for an excellent presentation and your questions that facilitated the total presentation.
I just think that was an absolutely amazing presentation. And you have some great people. Wow. Thank you so much again, Stacey and Tate, and thank you, Angela Cook, for a really clear and compelling presentation. So just about here, I just kind of scanned the room and I took a look at your faces and I could see where you could use a break as well. Yes. So we're going to take a quick break for about 15 minutes. Stretch your legs and refresh yourselves, and we'll meet you back here in just a while as we continue with the third session, another hot session on the way. And today is just absolutely amazing when it comes to
no problem at all. I don't mind.
So we'll see you back here in 15 minutes, and we'll continue with more.
I'm going to try and learn. You learn what you learned here today anyway. You learn some more.
Sir Andre, our assistant here.
The chairman of the ready came up. I apologize and took them there. And then continue the fantastic year. So you and I meet or not waiting? Everybody meet. Everybody. I just FSC at the meeting. So that's how you get the fast. That's how you get the So, you tell me what you mean. Tell me about Michael, etc. Almost there. So, you never come about 1 glass of wine. What's better than that? Come on. Taste the nice from you. Yeah. Great number. Yeah, that's so I want to get to
I thought I spoke everything. I was very yeah, I liked it, but I liked it.
You go over there. I'll be right. I'm actually stepping up. This is the one I really want to see.
Hello, boss. We're visiting our factory. Sinotech Group self-building equipment fixer and rough trade our production.
Enjoy peace of mind knowing that your hard-earned money is protected by the CJAS. That's right, the CJAS Deposit Insurance Scheme guarantees you $1.5 million your deposits and your tax and building cycles. This means your deposits savings and checking accounts are covered and risk easy, knowing that your deposits are secure. Your deposits are always protected. For more information, follow us on Facebook, Instagram, and Twitter at CJAS or visit our website at www.cjas.org. Enjoy peace of mind knowing that your hard-earned money is protected by the CJAS. That's right, the CJAS Deposit Insurance Scheme guarantees you $1.2 million your deposits in your tax and building cycles. This means your deposits such as your savings and checking accounts are covered and risk easy, knowing that your deposits are secure. Your deposits always protected. For more information, follow us on Facebook, Instagram, and Twitter at CJAS or visit our website at www.cjas.org. Enjoy peace of mind knowing that your hard-earned money.
Ladies and gentlemen, we will be starting in another 2 minutes. 2 minutes, we will be resuming our session number 3. And we'd like you to take your seats as soon as possible because I will do nothing without your permission. This is your conference. Still to come, we have the Honorable Brian Sykes, the Chief Justice. He will be talking about building investor confidence through judicial efficiency. It's a session that we're looking forward to, as well as alternative investments, future business financing, and there's a whole lot more that we can keep moving forward. Okay, so your 2 minutes are up. Let's rock and roll. Session number 3 is titled Effective Motivations to Fuel Growth and Development in Capital Markets. Now, of course, regulation plays a vital role in building trust, protecting investors, and enabling innovation. This session will look at how regulatory frameworks can support growth while maintaining stability. And this session will be moderated by the head Economic and Financial Research and Analysis, National Commercial Bank of Jamaica Limited, and one of our major sponsors. I now invite the moderator, Dr. Leo Ray Gordon, to take the stage and get us started. Here's Leo.
The World Cup is coming up in June. Can I see a show of hands of those who are going to the World Cup? Alright, maybe. Can I see a show of hands for those who will be watching the World Cup on TV? Alright. Any Brazil fans? Are you not? What about Jamaica? Do you still have a chance? We're still rooting for Jamaica to reach the World Cup? I heard some people, I don't know why. We will get there. So you're probably wondering, why am I talking about football after a capital markets and investment conference? Well, my opening remarks are aimed at having a level playing field, right? A common understanding of what the role of the regulator is. We have two regional regulators from Jamaica and from Belize. Now, FIFA is the governing body for football. FIFA determines the length of the field should be 110 meters long. There should be a pole that is 8 feet high, 10 feet wide. There should be an 18-yard box within which, if you're fouled, you have to defend a penalty. In a similar regard, our regulators set the rules of our game. And in addition, as supervisors, they are as well the referee. The referee determines how you infringe. Has the ball gone outside? Are you having fair play? So the topic of discussion today, and the question we asked, and which has been asked for the past 3 days, is effective regulation to fuel growth and developments in capital markets. We have two able presenters today. And first, Mr. Claude Taylor, who is the Director General and Deputy Chairman of the Financial Services Commission of Belize. Which in his capacity, he provides strategic leadership and oversight for the non-bank financial services sector in Belize. Please join me to welcome Mr. Taylor. Good morning. So, Belize's capital market is young enough. We still remember when we drafted the law. That we already learned a few lessons the hard way. That turns out to be the very early place to be when we're talking about effective regulation. So it's from that perspective, in the third place, early in the journey, was already informed by experience that I'd like to share how Belize is approaching effective regulation to fuel growth market development. First, let me take a consideration. Of course, thank you, my good friend, Lisa, for inviting us to participate the first time in this conference. And so I hope I'm not missing anything that will cause me to disinvite me next year. The JAC has previous experience with the FSCP under Street Force leadership. They did launch a mission just before COVID to come down and to talk to us about capital markets development in Belize. So I think this is a good progression of how we restart that conversation and see if we can advance it further. I was, of course, as well, quite struck by your Prime Minister's excellent opening remark from Monday, or Tuesday, sorry. And he particularly called my attention at the end of the speech when he talked about the fact that our regulatory architecture may no longer be fit for purpose, that we need to change it and look at what we need to adjust. And he specifically said he was not making a policy pronouncement that evening, but he gave hint at where he thinks we ought to go. And I think part of what he's thinking is, I think he aligns very nicely with what we want to do is how do we use regulation for the regulatory architecture to encourage development and growth in the capital markets. It's not all about regulation, it's not all about risk. So our foundational law is the Securities Industry Act, which was finalized in 2023 and became effective only in January 2024. This means that we're at the very beginning of our capital markets experience, and we have the advantage of learning from more developed markets. The FSC's vision is to be an adaptable regulator that fosters competitiveness, fairness, safety, and soundness, while facilitating capital formation. We intend to achieve these objectives through using effective regulations, financial inclusion, and the supporting infrastructure prescribed in developing private capital markets. So rather than viewing effective regulation and financial inclusion as separate initiatives, we see them as fundamentally everything we do as a regulator. So I want to just touch on 4 areas today. Fire starters in our views of fuel growth and development in the least capital markets. These are financial literacy, consumer protection, regional cooperation, and responsible innovation. Let me begin with the first word, which is financial literacy. Focusing on communication and education. We believe that leading capital markets need informed, educated, and engaged investors to grow and develop effectively. This is particularly important in developing a market like ours, where many of our citizens, and I think the previous speaker touched on this, may be encountering capital market concepts for the very first time. So on the transparency side, the FSC made several commitments to ensure that our regulatory actions and priorities are visible to all stakeholders. We published our strategic plan. We have made a commitment to publishing and holding annual work plans which detail our specific regulatory priorities and the key messages that we see emerging from our overview of the market. We believe that direct engagement, through direct engagement, we can host annual meetings with our market participants to share our successes and discuss the challenges and outline our future direction. This creates dialogue rather than one-way communication and channel and keeps us accountable. Turning to investor education, we have taken several concrete steps to improve financial literacy across segments of Leeds. We partnered with the University of Leeds our national university to develop a comprehensive financial services course that is focused on IOSCO principles. And I think one of the concrete things we can talk to the CJAS about is their, I'm not sure I'm correct, the e-campus or e-learning platform, because we do think that is something that we can certainly leverage in the leagues. We of course are partnering with IOSCO as regulators across the world we do every year in promoting World Investor Week to raise awareness about investor rights and protections in the leagues. So our second pillar is consumer protection through risk-based supervision and targeted regulation of high-risk products. This is where we put our principles into action by directing our limited regulatory resources where they can have the greatest impact on investor protection. We introduced risk-based supervision and the Securities Industry Act in effect. This approach allows us to direct our limited resources strategically to areas that pose the highest risk to investors, rather than spreading our efforts across thinly across all supervised entities. The second component of our investor protection pillar involves developing specific regulatory frameworks for high-risk products. We are particularly concerned that investors who have not had adequate financial education may be exposed to disproportionate risk if they engage in certain products without fully understanding their complexity or potential for loss. We currently have two major regulatory projects underway for investors. The first is the regulation and how we address digital assets. We recognize that digital assets can increase market accessibility and affordability through disintermediation, making access to capital and capital markets more economical. But we also pose it can be fraud and market manipulation. Our regulatory proposal comprehensively addresses the registration of digital asset service providers and digital assets, including regulation of their conduct obligations, systemic risk consideration, investor education requirements, investor protection measures, etc. These protections measures include, among other things, plain English language requirements to ensure that disclosures are understandable, full risk disclosures to the investors so they know what they're getting into, what they're buying, and robust conflict of interest management to ensure that service providers act in their clients' best interest. Our second project focuses on highly leveraged over-the-counter products. These products can result in rapid and substantial losses that exceed investors' annual investment. We're incorporating IOSCO's recommendations on these products into our regulations, which include both conduct measures for firms offering these products, disclosures and investor education requirements, etc. And our approach also emphasizes product awareness campaigns to ensure that investors understand what they're buying, warnings, etc. To these investors, multi-channel communication to reach investors where they are, partnership initiatives with other regulators and stakeholders to amplify the message. Then the FNC was just a week ago admitted as an honorary member of IOSCO. We, colleague from the CJAS, where we were able to sit down and have a chat with a regulator from that commission. And we had a very good exchange about this same topic, and came up with some very concrete actionable points that we as regulators, as securities regulators, can take to move this forward. And then the third and final pillar is responsible innovation, focused on market access and the use of regulatory technology. As I mentioned at the start of my presentation here, capital formation is key to the objectives, because without it, our capital market cannot fulfill its fundamental purpose, connecting those who need capital and with those who have capital to invest. We intend to achieve this through responsible innovation, and we're leveraging our status as a small developing market to our advantage. Being small allows us to be nimble, to experiment, and to learn from both successes and failures in a controlled environment. We are currently developing a program that borrows from regulatory sandbox experiences, specifically designed to experiment how to simplify market access to small and medium-sized enterprises. And I think heard that that's key throughout the conference here as well, how to get SMEs access to capital. So for a limited number of partners each year, we will make available issuers and investors a regulated space to bring issuers together with relevant regulatory authorities to understand their business objectives, structure their offerings appropriately. We will use the exemption powers built into our law to emphasize regulatory requirements to customize regulatory requirements, the specific circumstances of each offering, rather than applying one size fits all approach. The sandbox approach serves multiple purposes. It allows us to learn in real time about the challenges that these young businesses face when trying to access capital markets. It gives us the opportunity to test whether our regulatory framework is appropriately calibrated for needs adjustment. But most importantly, it allows us to refine our approach based on practical experience. We intend to run this program for a few years until we believe that the capital market cycle has become self-sustaining, and we have appropriately refined our rule based on practical experiences that we gain. Finally, we're using RegTech to facilitate how investors and market participants approach the regulated space. To that end, by way of example, we have just launched our new digital licensing platform called Licenses. That follows the entire licensing cycle from submission of initial registration information through ongoing compliance, reporting requirements to filing annual returns. All of this is happening in a secure and more accountable digital space, easily accessible to applicants, where there's transparency and that is enhanced, and where the FSC itself will be held more accountable for processing times and regulatory decisions. This platform reduces market entry barriers, streamline processes, and makes it easier for both domestic and international participants to engage in our capital market. These initiatives represent the
business commitments to fuel growth and development in the capital markets that was talked about this morning through effective and responsible regulation, building capital markets, inclusive, transparent, and sustainable. We're taking a very measured approach that recognizes our current state of development while positioning ourselves for future growth. And we dialogue with our stakeholders all the time, our fellow regulators, and so we welcome feedback that anyone can give us in how we may be able to offer and develop more initiatives on the initiatives that we have just described. And with that, I would take any questions. Thank you very much.
Seems like the capital markets and financial sector is on its way through financial literacy, investor protection, regional collaboration, and market access. I'll next like to ask Lieutenant Colonel Karen Morrell, Executive Director of the Financial Services Commission in Jamaica, join us on the stage. As Jamaica is heading to the World Cup, we will hear our local governing body and referee for the enhanced regulatory framework to allow for growth and development in our hands. Please join me in welcoming the
Chairman of the JSC, CEO of the JSC, Chairman of these proceedings, moderator, friends, guests, distinguished panelists, good morning. What? Good morning. Good morning. I would like to first thank the conference organizers for convening this important regional forum and for inviting me to speak. Events like these are vital. They create a neutral, expert space for dialogue, the exchange of ideas, and constructive challenge between regulators, investors, insurers, and market infrastructure providers. By bringing diverse perspectives together, we accelerate practical solutions that deepen our markets, unlock capital for growth, and strengthen investor confidence. I appreciate the opportunity to contribute to that conversation today. What I intend to cover over the next couple of minutes is to prime the conversation space. I'm aware of the comments made by the Prime Minister and the Minister of Finance. And therefore, this will be the third leg, right? So the Prime Minister speaks, the Minister speaks, then I do the work, correct? That's what it was? Not quite. I delegate some. So, in Prime Minister's speech, I would like to indicate that the FSC and the JSC have already begun discussions. We have at least a 2-year project that has commenced almost about a month or two after I initially started at the FSC. On them, I delegated to a bright PhD, Dr. Marshall, and I asked him to speak with an older gentleman, an older experienced gentleman, the CEO of the JSC. If you can stand, my former boss, I can stand, right? And through that, we have primed the space. So this is not a pronouncement, is indicating to you, telling you, so you are getting personal knowledge of what our thoughts are, and the thoughts that have been discussed, certainly at the FFC level, and we're now speaking with our partners, the JC, to see how we can continue that dialogue. And I believe in actual steps. I think that's something I learned from the CEO of the JC. While we speak and discuss and collaborate, what's important is that we have something actionable coming off of those talks, so it's not only about amount. And therefore, I am carrying this space this morning. So we're having a conversation. And by carrying this space, I'm setting up the effectiveness insofar as it relates to regulation and outline some key elements of effective regulation. I will then outline how regulators with a mandate for market development can design and sequence the priority reforms we need. I will finish with some of the regulatory enhancements we have observed globally that we have been reviewing and contemplating as part of our current capital market regulatory enhancement program. So that's actually a project at the FFC, the capital market regulatory enhancement program that are geared towards market growth and development. Many persons sometimes indicate that regulation and solution are the same. They are not. So when someone speaks about regulation, like I am, I'm saying I'm preparing the field, right, just before the game starts. Probably my coach that Liverpool needs to do a bit better job, then we'll defend our title better. But alas, so when I say regulation, that effectively means that there is a lot of conversation that coaches need to have before we start the game. I'm speaking about pre-game press conference. I don't go back to the slide. So how I do my slide, I do not read it. You have to read the slides. I will indicate to you other points, other things to know. So has everyone read the slide? Right, this is how we'll do it. This is how I present. So effectiveness and effective regulation. Please look at the slide. Effectiveness is inherently objective-based, right? Regulation is effective to the extent that it achieves its stated rules, where these rules are, and these are prescribed by ISO, investor protection, market fairness, efficiency, and transparency, the mitigation of systemic risk, or market growth and development. For today's session, I'm narrowing the lens of it, right? Defining effective regulation as rules and supervised policies that are explicitly formulated, proportionately designed, and reliably enforced to foster capital market growth and development. In this vein, effectiveness means the regulation directly addresses market frictions, is proportional to issue size, provides legal and operational certainty, and enables innovation where appropriate. So how do we design and sequence based on that? Well, the key attributes are as you see on the slide. So what do I want you to take away from this slide? Well, when regulation has these attributes, it reduces perceived risks, lowers the cost of capital, and attracts a broader and deeper investor base. What are these essential elements of? And what are these essential elements of? Market growth and development. So, regulators should follow a pragmatic sequence approach. In the slide, diagnose and prioritize, design proportionate interventions, build capacity, capability, and infrastructure. Use targeted incentives and balance, ensure legal and cost agency alignment, measure and iterate. Now, this governance do diagnose, pilot, scale, monitor, and keep regulations effective and growth oriented. So, what has our diagnosis revealed thus far? Anyone want to know? Well, it speaks to several things. It speaks to efficiencies, tangential growth, and market development. First, there exists information assumptions, slow and delayed reporting, frequent data errors from manual processes, and the need for more supervisory visibility. As such, there's a contemplation as an kind of conversation, right? So having looked across what happened in the USA, Europe, Asia, South America, and priming the conversation. So there's a contemplation of the need for a disclosure modernization program. I suspect the question and answer can speak more on it, but we're moving from manual to more IT-based. And I'll ask you, if you ask me a question, I'll ask you back, what is IT? Define IT. Let's have a conversation about that, because when I define IT globally, they say, no, that definition has moved on. Really? Let's find out what IT really means, and it's not it. To unlock faster, more accurate decision making, this would mean moving disclosures from documents to data, structured machine readable reporting transformations, disclosures from static documents into usable data, by adopting standardized taxonomies and digital filing formats, for example, XBRL, which is a long definition, extensible business reporting language, or IXBRL, or secure APIs. We can make financials and material event notices instantly comparable and automatable. That reduces due diligence time and cost for brokers, asset managers, and risk agents, and enables the FSC to run more effective automated surveillance. We believe for Jamaica, a field approach would be best suited. Who should I start with first? Any guesses? In the large and more complex issuers, then mid-caps with simplified tagging and extended transition periods for junior market companies. The Commission is about to begin wider dialogue with the JC and the industry to examine this matter more closely and co-produce proportional modernization. Now, we need to ensure that that occurs. It doesn't make any sense that every single issue and there's no buy-in from the JC, the industry, and other stakeholders. There needs to be a shared mentor, and that is what I'm planning today. Second, market depth is depressed by a low, uneven turnover, shallow secondary trading in corporate bonds, limited, dedicated providers of liquidity, and a narrow product set. To address this, the Commission is currently undertaking research. It's currently undertaking the research to ensure that we put the correct framework in place. Let's think about the possibilities. Have you ever thought about a designated market maker regime? Well, if we are thinking about that, we need to collaborate with the JC to put that into action and to ensure that such a designated market maker regime and enabling environment needed if there is a feasible endeavor. I thought that was so bad of a non-farming sector. Third, slow regulatory formulation. This process has implications for the timely introduction of new products and solutions that could broaden investor choice and deepen markets. FSC is currently developing a regulatory sandbox to provide a controlled, time-bound environment where firms and regulators can jointly test and evaluate innovations, such as tokenized securities, digital custodians, fractional ownership platforms, under supervised conditions. The sandbox purpose is to clarify legal treatment, ownership, transfer finality, and validate AML, KYC, and custody arrangements, test market governance tools, and assess consumer protection measures before any full-scale authorization. For Jamaica, a regulatory sandbox will enable fractionalization and broader retail access to assets without exposing the full market to untested operational or legal risk. Successful pilots should have a clear path to licensing, reporting requirements, and investor protections before wider rollout. These considerations include organization, a possible designated market maker regime, a regulatory sandbox. These reflect initial conversations from the FSC's regulatory review process. We believe each, if designated proportionately and undertaken collectively,
with the JC and the industry will have positive, measurable implications for the growth, depth, and resilience of Jamaica's capital markets. In particular, the framework that we are looking at, the sandbox, is something that I personally helped or put into design, but I got an assignment years ago from guess who? Who do you think I got an assignment from? Morrison. Already know. I just went back into my book and took it. I hope it wasn't, is that copyright? Is it copyright? Years ago, I was speaking to a friend of mine that told me copyright is my right to copy. What we can talk about this? We can talk about that. Just don't know. In closing, effective regulation for growth should be targeted, proportionate, and implemented. And I think that's very important because it doesn't make sense that indicate that we build the best framework and the JC and the industry find difficulty in implementing it's a neural handshake. The contributions I've outlined, disclosure, modernization, a designated market maker regime, and regulatory sandbox are the key considerations for the FSC's regulatory enhancement program. Implemented thoughtfully and with the right support, these initiatives will meaningfully accelerate the depth, liquidity, and resilience of our local capital markets. I will elaborate more during the question and answer because I have some prepared answers based on the pillars of this project that I illustrate more, but this is your first taste of it. So thank you for your time and attention.
Thank you very much, Lieutenant Colonel. You definitely have imparted confidence for us at your head of the NSC. How much time do you have a question? 1 minute.
1 minute. No.
Well, let me be pointed and direct to ask, firstly, Lieutenant Colonel, a question that has been repeated a number of times at this conference. There are a number of, the regulatory framework in a number of instances is quite limited. I won't go through the list of restrictions on foreign currency, debt, equity that our institutions face. But the analogous headline keep Khalifa, imagine this. Lionel Messi restricted to 20 minutes on the football field per match. Or perhaps Lamine Yamal restricted to 15 minutes per match. That is the similar implication that we could perhaps estimate the lost return for investors over the past 15 years. So, Lieutenant Colonel, can I ask you to, how soon can we expect a revision of some of these restrictions?
My answer is, my team is bigger. I don't want any of these guys playing. I don't want them all playing. I don't want guys playing. I want to, all of them be either even a red card or injured or stuff like that. I mean, and maybe Ernest Clark is just hiding. The team is not doing what I wanted. But alas, I'm glad for the question because they give me a platform to speak on a couple of issues. Now, the NSC has heard the pronouncements and the constructive debate at this conference, and we take them seriously. Our policy team will review these inputs in the near term and want to take structured stakeholder engagement to assess whether and how allocations will be adjusted, and this specifically relates to the minister's speech concerning pension allocations elements, and also the president of the Pension Association of Jamaica indicating that there is possibly a need to relax
these thresholds. We have taken into consideration any change will be evidence-based. Any change will be evidence-based and will analyze the risk on market and risk management capabilities of the institutions. Now, I would also like to address, if I may, what the Prime Minister alluded to in his speech. Now, strategically, the FSC is already aligned with the principle that regulation must be under constant review and adaptation. We are finalizing a 4-year program of reforms that maps our strategic plan and longer-term regulatory goals and strategic objectives. In parallel, the FSC develops an annual regulatory agenda derived from internal and external assessments through various gap analyses and guidance from international standard setters. All that means, the government's directive will therefore feed directly into our upcoming plans for the year. I will also await the formal policy directive from the government to understand full scope and priorities of unlocking capital, supporting market development and advancing macroeconomic growth. Once received, the directive will be assessed against our own existing strategies and supervisor findings to determine concrete regulatory actions and supervisor processes, but we are aligned. It will be evaluated alongside our 4-year roadmap, integrated with our priorities, and identified through our international best practice policy group. So what do I mean in practical terms? It means market participants should expect a coordinated sequence of actions, consultations with my key partner, the JC and the industry, type the deposit papers or concept notes and phase rulemaking. We stand ready to work with the government, the exchange, and the industry in order to ensure that this sector grows and develops. And as long as Messi and Yamal are paying for Liverpool, you'll get 90 minutes plus overtime. Thank you.
Thank you, Lieutenant Colonel. Just before I turn it over to questions to the audience, I have a quick question to Mr. Hager. In Belize, we see a reduction of public debt to GDP from over 100% to 60%. We see where the central bank itself is significantly reducing its holdings of government securities. When Jamaica demonstrated that kind of structural shift and trend, we saw the impact on financial markets. Can you just give us a brief word of what your expectation is from these structural shifts for investors in Belize?
Respond, but look, the model in Belize has been very bank-centric in terms of businesses looking for capital for growth and that sort of thing. So I think by creating fiscal space, what we have seen in Belize is an ability of businesses to look in other directions for capital growth or capital to grow their businesses. And I think this lines up nicely with what the government has now asked us to do, which is to develop and even capital markets. I mean, I don't know if you know the history of capital markets. I mean, before our Securities Industry Act came into place, there were a few issues by a few of the utility companies, etc. But it was completely unregulated. There was absolutely no regulatory architecture in place for it. And so I think when the government took the steps that it did to reduce the debt the ratio, then I think they made a fundamental shift in terms of how can we create this case for businesses in the lease to raise cheaper capital. But I think that if I can delve into other, in the previous panel, talked about a lot of the structural problems that we face in terms of the reluctance for business to be transparent, especially family-owned businesses. There's not the discipline of revealing the financials of companies, etc., that would give investors or pause to invest in their companies. And one last thing I would end with. Please just yesterday, through the government decided to buy back the utility company from private investors and spawned off via an offering, a public offering, which the Commission had to review and approve to ensure that they line up with their disclosure rules and requirements. 140 million, which is the largest offering in the East. And it actually closed yesterday. It was oversubscribed by over 500,000 shares. 2,000 investors, retail investors indeed, participated in that offering. And that's what changed a lot of these issues.
Thank you very much. I think we have time for 2 quick questions. One.
Excuse me. I had to, in the interest of time, just one is for Mr. Hickock. I'm glad you brought up the hydro-release. I feel badly, I'm originally from the East Coast, so I have a vested interest here. So the government of Belize recently launched the hydro-release IPO. You bought back the asset and sold it to the public. I'm glad to hear that it's been oversubscribed. Congratulations. However, there is no active market for investors to sell their shares if they would want to do so at some point. Additionally, businesses in the struggle with raising capital. Capital exists, it's in the banks doing nothing. Businesses need the money, they have no way to access that capital. Isn't it time for Belize to develop their own stock exchange? And we're going to say the country is too small, but if OECS can have an exchange, if Barbados and similar population can have an exchange, if Guyana can have an exchange that trades once a week, why can't Belize do the same? Because investors, buyers and sellers need to find each other, and businesses and capital need to find each other.
Or list it in Jamaica.
If you can just respond briefly. Either you're asking for me to get myself into trouble now. But look, I acknowledge what you say, but I still disagree with you. The market in Belize is too small for an independent stock exchange. However, we can explore alternatives here. I think this is where the JAS Now, as of today, those are my personal views. Thank you very much.
I have a God, so that I could yeah, I need to go touch it. I mean, you realize people take minutes into making the you saw the people who was attacked.
Well done, you gentlemen. Let's give them another round. We're just here. Those are valuable regional perspectives. We move now into session number 4. This is one of those anticipated sessions for any number of reasons. It's called Building Investor Confidence Through Judicial Efficiency. Now, investor confidence depends not only on markets, but I think it depends on the systems of justice that are fair, effective, and trusted. Well, for this we have a man who is at the center of it all. Mine is not a responsibility to introduce him, so I'll now turn things over to the session moderator, Director of Grace Kennedy Limited. Please welcome Dr. Indiana Minto Coy. Hello again.
Good afternoon again, everyone. Who here is a fan of Marvel Studios? Fantastic. So I'm among my people. And today we have a gentleman who I keep looking at and wondering where is his cake. And even more so because we have a task today of helping him to get out of here to make a flight. We don't want him to have to pull out the case today to get to his destination. So I'm asking the audience to work with me on this fantastic panel that we have, which is focused on building investor confidence through judicial efficiency. And today we have with us a man who's quite capable, quite suitable to be speaking on this topic. As the guardian of Jamaica's justice system, he's a steward of institutional trust, he's a reformer, a modernizer, and therefore a key economic partner. And he is, let me take a breath, the Honorable Mr. Justice Brian Patrick St. George Sykes, OJC. He's an outstanding Jamaican jurist and public servant who has rendered committed and dedicated service to the justice system for almost 40 years. He's a graduate of the University of the West Indies, as well as having secured a master's in law from the University of Wales College of Cardiff. Justice Sykes is also well published, and of course, in 2018 was sworn in as our 8th Chief Justice of Independent Jamaica. So please join me in welcoming the Honorable Mr. Justice Sykes to the podium.
Thank you very much. Thank you for the introduction, and thank you for the invitation to share with you that often that the judiciary is invited to events of this nature. And I wonder why, but I'm not surprised at state of affairs, because whenever we speak about building investor confidence or investment or economic growth, much attention is paid to the role of the judiciary, or even to ask whether the judiciary has any role in that endeavor. And whenever we speak of efficiency, it usually focuses on clearance rates, disposal rates, hearing uncertainty, and so on. And those are important things, but those things are not ends in themselves or a means to an end. So may I suggest that the role of the judiciary involves peace, security of person and property, economic well-being, promoting growth in GDP, and seen in that way, one can really see, I hope, or beginning to see that the judiciary has a critical role to play in economic development. That is within the context of the core function of the judiciary, which is to hear and determine matters of controversy between party and party, citizen and citizen, whether you are a regulator and regulated, or company and company and whoever the parties are who are unable to resolve their dispute. But it's a question of time and money. One of the complaints that has been made about our legal system and legal systems generally is the time that it takes for matters to be completed. And I must confess here that courts have not been particularly concerned about efficiency for the thousands of years that they have existed. And but that focus started to change, unsurprisingly, in the United States within the last 50 years. And increasingly it is recognized that there is indeed a connection between economic growth, prosperity, and the role of the justice system. And this has been studied by a number of academics over time, certainly over the last 30 years. So for example, the gentleman known as Kenneth, he published a paper, The Judiciary and Economic Development, from the University of Chicago Law School in 2006. And what he pointed out was what some have described as the deceptively simple point that implementing best practice in and of itself does nothing. So it is interesting to hear about the regulatory framework and so on. But regulations are just words on paper. That's all they are. So until they are enforced, well, that's what it is. Just words on paper. But words on paper cannot enforce themselves. It's people and processes and systems that give life to them. A constitution, for example, is only as effective as the rigor of its enforcement. So that is why he made the point that implementing the best laws accomplish nothing unless it is supported by efficient and rigorous enforcement. And that is where the dispute resolution mechanism established by the Constitution, the courts come in. And so we have a separation of powers, and oftentimes we hear from the executive, we hear from the parliament, but rarely do we hear from the courts. And when you have a dispute, unless you go to arbitration or mediation, there is no other place for you to go but to come to courts. It is good to know that we are starting to share an interest in the efficiency of courts. And there are other things that are important regarding the contribution of the judiciary, or certain underpinnings that need to be there. One of them being an independent judiciary. For those of you who are students of history, if you look at it from the legal standpoint, it is not surprising that the Industrial Revolution began in England. One of the reasons for that was that persons with capital in Europe felt, rightly or wrongly, that they would get a fairer hearing and better enforcement in the courts of the United Kingdom, and that contributed significantly to London becoming a major financial center. So that is one of the outstanding contributions made by the legal system. And so what I'm going to ask you to all of you here have smartphones, right? Who doesn't have a smartphone today? So I'm going to ask you to do something for me. When you have to take out the phones. Yes. So you have the phone out, and you're going to open a browser. Any browser. And after you open the browser, you're going to type in these words. And if you have your AI application, you can also do that. You can produce similar and identical results. So you're going to be typing in contribution of the legal sector to the UK economy 2024 or 2025. Choose a year. Contribution of the legal sector to the economy of the United Kingdom. Has anyone found it? Yes? What does it say? What does it say? Not yet? Say that again? 52 billion. Okay. What? Dollars, pounds? Yes. And so the point that is being made there is that they have actually started to measure these things. And one of the reasons for that is because of the efficiency of their courts and the reputation of their judiciary. Persons from all over the world, in London, their dispute resolution center, where they are engaged in contracts. And so the question arises, can that be done within the Caribbean region? And the answer to that is yes, but then you have to consistently invest in the courts. Unfortunately, I wasn't here when the Prime Minister was saying, but if you were here today, I would say, okay, this is one of the reasons why I need to consistently invest in the courts so that you develop an ecosystem where you can rely on consistent enforcement that will allow to contribute to all that you have been discussing since yesterday and this morning. So the gentleman, Mr. Dam, he has indicated from surveys done in South America, Brazil, Peru, and in the Far East, the Philippines, it shows that firms will be willing to increase the investment if they have more confidence in national courts. And the same applies to economies in transition as the former Soviet bloc countries were style, and also developing countries. And so the point is that if you are going to talk about developing your capital markets and so on, you have to have a reliable, consistent, fair, rigorous enforcement environment. So the timeliness is critical. Whether you're in industry, you know better than I do, time is quite useful in money. And so those are the ways in which the courts can contribute to economic development. Now, we have also done studies to show that when you have federal states, different states, economists have been able to demonstrate that the more efficient and organized states within the federal states actually experience greater economic growth. So hence, within the same country, some states will experience higher levels of economic growth, and then enforcement mechanism, i.e. the judiciary, has a significant role to play there. And persons who have studied this and are beginning to quantify the cost for an economy of an inefficient judiciary, and some are estimating that it is as high or as low, depending on the perspective, as 2.5% of GDP annually as the cost of the country. And so, what is our GDP? You will know this better than I do, but let's assume that 2.5 applies here as well, and you apply that over time, and you will see the cost of inefficiency in our court system. And we are making the argument that when we speak of case management, when we speak of hearing aid certainty, they are not empty words. They have a meaning and a purpose, and that is to be able to create an environment and a culture that has high regard for timeliness. Persons have done economic models on the question of time that it takes to resolve disputes and the efficiency of court systems. And in looking at Italy, for example, they have estimated that the average time for resolving a case in Italy 1,260 days. So if it is reduced to 260, the model suggests that the time needed to double per capita income in Italy would be reduced from 6 to 24 years. So this is the kind of impact that, according to persons who have studied these things, an efficient judiciary can have on the development of our country. The other thing about inefficient judiciaries is that it incentivizes lawbreaking. So when you enter into a contract and
one person intends to break the contract. And part of the risk assessment is going to be, if I am sued, what's it like to go how quickly will it get to judgment and enforcement? And then if the person makes a calculation that's worth taking the risk, at some point they decide that this contract is onerous and I really don't want to get out of it, they are going to do exactly that. And so, an efficient report system is not just the concern of the key business, but it should be the concern of everyone inside this room. And it's interesting, obviously, the suggestion was being made that if Beli is not having a stock exchange, may derive some assistance from our stock exchange, but that may result in some kind of litigation, depending on what the circumstances, meaning not whether it can be done regularly or not, but in terms of the person who may sell shares or engage in selling, buying and selling shares. So whether that is going to be organized, and the solution is, in the event of a dispute, the persons in police would want to be hearing that, oh, if you so in Jamaica, it will take 5, 6, 7, 8, 9 years. That's not what they want to hear. They want to hear that it can resolved within our time standard, which is usually 24 months. That's usually the time standard that we have set. And so, to attract investment then, having an efficient system is critical. Now, there's another study done. Gentleman named Mr. Khan and others, but in 2024, coming into 2025, looked at 108 countries between the period 2004 to 2020. And what they concluded was that high levels of judicial efficiency have a positive and significant impact on financial system efficiency and its components, as the financial institutions and financial markets, and this was generally the case regardless of whether the country was rich, poor, or independent. It doesn't matter to see this, that was a general conclusion drawn from the survey that was done. And resolving disputes in a timely manner has another benefit. For those of you here who are representative of companies, if you are sued, you go to your attorney. And your attorney says to you, in the event that the claimant is successful, your potential liability is this sum of money. Immediately, you have to begin to make provision for that. And that means that this capital take out of circulation for an extended period of time. Time is literally money. If your liability is going to be running into millions, a potential liability that's millions of dollars that you really can't use until the case is finished and you know what the outcome is. Yet another reason why you need to have an efficient work system. Now, a lot of the talk about efficiency, particularly in the context of commercial men and women and stock exchange, have tended to focus on commercial courts and civil courts. But criminal law is also important. High crime and economic growth will go well together. And so when you have an environment in which people are fearful, they don't come out. They stay at home. So industries such as the entertainment industries, service industries tend to be adversely affected in a high crime environment. In a high crime environment where you have protection money being paid consistently, not only does it take away capital from the business or from the household, it also prevents investment in the business and the household.
So when you drive around in some of our communities, it's not surprising, and we really should be surprised that if they would run down, and then if you walk around in the community, you hear people speaking about the dog. Because the dog is a predatory individual who takes away the capital of households and businesses. So the criminal law also has a role to play in enhancing economic growth and producing prosperity. So effective and consistent enforcement of the criminal law is also critical to developing the economy. So think of the household that may have painted the house at Christmas, so that's or paint some ladders. When they have new furniture, they have big front ports, right? You know, the furniture, some that. When you're in a high-crime environment, it disincentivizes homeowners from maintaining their house. What's the point? If some criminal is going to turn on someone and try to out of the house, or extort one of our means, the one that I would not use to do this, I no longer have that money to utilize in that way. And so in that regard, then, efficiency of the courts and consistency of the courts and rigorous Christian laws and enforced are important. So what have we been doing here in Jamaica? So we are members of the Standing International Forum of Commercial Courts, Judicial Dispute Resolution Network, and what are those institutions? They help us now to develop appropriate framework for effective enforcement of laws. That is on the commercial side. We're also part of the International Consortium for Excellence that speaks to the efficiency of courts generally. And this is why metrics and performance standards matter. And so this was why, for example, when we speak of the parish courts being backlog free, what that means, and we have reduced the time standard from 24 months to 18 months. The maximum time, generally speaking, for the portion taken in the parish courts is 18 months. But what does that mean? It means now that if you have landlord X who wishes to evict his delinquent tenant, there's a out of band of uses and is expected to come to completion. It also means that we can plan more effectively. Persons don't have unlimited sums of money to engage in litigation. So you know, okay, I can begin this for the idea to give you greater control over the money that you have. And so you know there's a time horizon, and all of this enables better planning for litigants who may wish to utilize the courts. The final point I wish to make is this. As far as our courts are concerned, we have implemented a strategic plan that we're aware of. It is on our website. If you get time to the browser, you will see it coming up. And what is it doing? It's really changing the way that you think. As you think rather than behave, because you can't do what you don't think. The thought is always preceded. Thoughts come before action. The action is preceded by the thoughts. And for those of you who are religiously inclined and you read the Bible, you know, it's starting Psalm 1 and Romans 12. A lot of emphasis is placed on the thoughts. So the gentleman who meditates upon the word of the Lord day and night, like a tree planted by the rivers of waters in Psalm 1. And so in Romans 12, it tells you about the revolution of the mind that needs to be undertaken. So it is within other kind of activity. So in the course, it's about changing the mind and how we think about courts. So we're thinking, of course, as service delivery institutions, and transforming the courts from being a colonial institution because we inherited them. And the fact of the matter is that our court system
has been a part of slavery, has been a part of colonial oppression and exploitation. That is how the courts were positioned. And so that after 1865, the police force came in to prevent murder being number 2, that is really historical antecedent of force. And so our court system was a part of the colonial structure, just never devised to serve the population at large. Because remember, most of us here came in as property. So up until 1834, we were bought and sold and left behind by 10 slaves to my son. Someone should be a young man. So from 1834, when we became free persons, now almost 200 years later, we are inheritors of the legal system. Then what are we doing? Right. Transforming how the legal system is viewed and to be seen as here to serve all people. By adding value to them. How does it add value? Reducing wait times, becoming more efficient, being treated more courteously, utilizing appropriate technology, or on the further commencing the development of the integrated electronic case management system, which means that you, your attorney, there will come a time when no, this is thought experiment. There will come a time when you will be able to conduct your business report from beginning to end in a digital space. You need to know where the portal house is. That saves time. We don't have attorneys who, by virtue of marriage and so on, that are overseas, and they're still able to practice here in Jamaica, coming into the court on the Zoom or Teams platform. On the same side, over 90% of our hearings are now online. And so that's the first significant development there. We still insist on coming from criminal trials, but on the civil side, unfortunately, we don't have the same insistence as on the criminal side. So those are the things that we are doing in Jamaica to make your lives easier and ultimately for me to get more paid, more prosperous businesses. So I have every interest in efficiency and economic growth and so on. That is my interest there. So I close then by asking you to join with the judiciary in imploring the government to invest sums consistently over time to improve efficiency and the appearance of our courts, because the ambience, the circumstances in which the courts operate, they do need a bit of enhancements. And so to see that the expenditure of the courts is not just government expenditure, it is an investment in the economy. It's an investment in economic growth. It's an investment in improving GDP and making our country a place to live, work, do business, raise families. And I will say, retire in peace and prosperity. Thank you very much.
Thank you very much, sir. So we are able to entertain a few questions from the floor. We just heard that the judiciary and investment in the judiciary is actually an economic imperative, right? There's a deep relationship between the judicial system and our economic and investment climate. Any questions? Oh.
Very good presentation. Keith Collister, Jamaica Observer for this purpose. How do you see the role of international our attempt at international arbitration here in terms of an existing international arbitration center, relationship with Bury, relationship with the Chamber of Commerce, in taking some of those cases away from your overfull dockets and leaving some space to drive that economic growth that we're talking about.
Well, I don't see it as changing away from the courts. I think of it as creating a dispute resolution framework or ecosystem where you have multiple options. The litigation model is one option. And when we think of litigation, we think of the courts. But arbitration is also built upon litigation model. It's just essentially a privatized legal system. So I have no difficulty with that. But we must also extend our thinking now to think of other ways of resolving disputes, whether through like mediation, for example. There's the Singapore Convention, which has been creeping to the start to become part of our law. Because the plan is to enact legislation to make the Singapore Convention part of our domestic law. Why is it that mediation was not so attractive in the past with the convention has solved, and that was enforcement across borders. So that was really the advantage of arbitration because of the New York Convention and a longer history as well, coming from the 1800s and so on. So it was enforcement across borders. Mediation didn't quite have that appeal. But the Singapore Convention solves that problem. And why is mediation being considered a viable alternative, particularly in small societies, in small economies, where you might have a dominant supplier, or the person who's supplying the product may have one or two buyers. Depending on what the product is, you have a dispute. You may want a relationship to continue because it doesn't suit anybody for the relationship to come to an end. So, litigation model, I'm lumping now court litigation and mediation, does not have that tendency because it's adversarial, and at the end of it, the judge can't say it's a draw. There's a winner, there's a loser, and costs are going to be imposed. The mediation model allows the parties, with the assistance of an appropriate media, to resolve the issue and even other issues in a manner that you do not have this feeling of victor and vanquished, and it allows the relationship to continue and significantly introduces time and introduces cost, because those of you here who have been involved in significant commercial litigation, you know how costly it is. It takes significant time off. You need to be attorneys, they have the process of discovery, you have to go through the documents, you have to put time on the various applications, and at some point the attorneys will say, oh, you need an expert, or the expert is coming out of wherever, and he or she costs this amount of money. And so it is increasingly recognized that the litigation model is helpful, but there are other ways of resolving the issue without this feeling of acrimony and being defeated, whereas mediation allows persons now to build the solution themselves. So they still have agency. Litigation model deprives you of agency, because once you provide the information, you are totally reliant on how the judge understands and interprets the evidence. So you are cut out. With the mediation model, you are an integral part of the process from beginning to end, right up to signing on the dotted line that this is the agreement. And so that is why we are promoting it. And if we are successful later on in the year, we have a world-renowned professor coming here to work with our judiciary to enhance the skills of judges. And that is why we are part of the traditional dispute resolution
network which focuses on judge-led resolution of disputes outside of a trial.
Thank you, sir. We have one more question.
Yes.
Yes, Justice Sykes, thank you. Roll people, Georgia community. Just for one clarity, as Jamaican corporations, larger ones in particular, seek to raise global capital, what is customary is that these contracts would be subject to New York State law. For my clarity, our final judgments in New York, I say Singapore, enforceable in Jamaica.
Yes and no, in the sense that there's a legislation, I don't know the name of the legislation, but there is legislation that makes provision for judgments obtained in countries to be enforceable here. So some preconditions will have to be met, but it is possible depending on the country that you are from. And so when you raise that point there, it is one of the reasons why an efficient judiciary here is important, and you can utilize the dispute resolution framework as a means of permanent, as what Singapore has done, for example. When the reform started there in 1980 with Chief Justice Young Bongo, incidentally trained as a lawyer but was a banker by profession, and then he was put in as Chief Justice. And he started the reform of the legal system there. And so they are now at the point where they have an international court. The lawyers from anywhere in the world can come there, represent their client, they don't go to Singapore, as a requirement. You come in, represent your client, get the outcome, and you're off. And so what I'm saying then is that we have to think of a day when our dispute resolution framework can be seen as an income generator and income earner. And so that is why I asked you to look at the contribution of the legal sector to the UK economy. So it's something that I think we have to look down the road, and it can happen, but it has to come now as a consequence of consistent investment in our courts and the courts becoming efficient and reliable. It's not going to happen overnight, but there's no reason why it couldn't begin to happen in another 15 or 20 years. So Singapore now is the financial center of Southeast Asia, which incidentally started because the then Prime Minister Lee Kuan Yew made the decision that Singapore must become the financial center of Southeast Asia. And so the government saw the court system as a part of the economic engine of growth for that country.
Thank you very much, sir. So, ladies and gentlemen, please join me in thanking Justice Sykes. Please remind us of the significance of the judicial system to Jamaica's economy. Investment in the judiciary is investment in Jamaica. Thank you very much, sir, and I hope you make your flight.
Thank you very much.
Okay, so there you have it. You know, I was hoping that someone would have asked, when investors assess a market, what signals do they look for in the country's justice system? I was hoping one of my colleagues, but you learned the folks would ask that question, because I think that would send a good message and good insight into the whole thing of justice as it relates to investment. Anyway, as always, next year. So again, we would like to thank Justice Sykes for his time, and it's like one of those first occasions where usually the judges would want to ask the question. You get to ask just the questions today. which is kind of great. All right, so this brings me to the end of my duties for not just today, but for the year. And can I tell you what a pleasure it has been serving you, meeting all of the new folks, for the first time and saying hello. And the conversation continues. And so from here on in, I'm now going to hand things over. You're in beautiful hands. Please say hello again to Rochelle Gamble.
Thank you, Auntie. A round of applause for the inimitable Sir Michael Anthony Cox. A round of applause. You know, Michael, you said that you wondered if about a question that the audience would have asked. And I actually know that the lawyers in here really wanted to ask the question because so thorough and robust was the Chief Justice's presentation that I'm asking the stock exchange to apply for all 12 credits that we should get, that we could just get from that presentation. Yes.
Absolutely.
Thank you very much to the stock exchange for that. So we'll just write that down.
Thank you. Good afternoon.
Good afternoon. So as we move into our next presentation, which again will be very engaging because we're looking now at alternative investments, the future of business financing. This session is going to be led by someone who is a familiar face, Nigel Pope, chairman of Northern Caribbean University Media Advisory Board, and he will be joined by Mr. Barry Spud Gray, President and Chief Executive Officer of CJAS Group. Ladies and gentlemen, a warm JSC welcome.
She just did the introduction, right? She did. Because Beresford is no stranger to all of us also. He's co-founder, and he makes sure I say the right things. He's co-founder, president, and CEO of CJAS Capital, where he leads the firm's mission to revolutionize alternative investments across the Caribbean. Widely regarded as one of the region's top investment banker, Paris is known for its innovative approach to unlocking capital and delivering transformative fiscal financial solutions. His career began in Europe at the capital markets, specializing in securitizations and structured finance. Upon returning to the Caribbean, he held senior leadership roles at top financial institutions where he consistently delivered standout results. And I can attest to him delivering standout results. I had the opportunity to work with him at First Caribbean International CIBC, where he was responsible for all of that financing, securitization, and all of that. And I ask you to welcome him as he presents to you the future of alternative investments. Ladies and gentlemen, Mr. Beresford Gray.
Ladies and gentlemen, good afternoon.
Good afternoon.
I think I'm standing between you and lunch, right? So, I'm sorry about that. I apologize for that. But first of all, I would like to thank the JC for putting on an extremely important conference again, a forum in which leaders in the financial sector and the business sector across the Caribbean can share thoughts, interrogate ideas, and also leave here with some stimulating concept and opportunities to look at. So, well done, JC. Today, I'm going to talk about alternative investment, which is something that CJAS is very passionate about. 10 years ago, when we founded CJAS,
we believe that the niche through which we could mobilize capital in the Caribbean was alternative investment. And for persons in the audience who aren't familiar with alternative investments is generally investments which are not publicly traded or in the traditional sense of bank financing or other type of long-standing financing. You are dealing with more illiquid investments such as private equity, private credit, real estate, and emerging assets such as crypto. That's really what alternative investment is. The beauty of alternative investment is that it allows for flexibility and more customized capital. So clearly, it complements the more traditional debt or equity capital markets type of capital. So let me start, and I always like to start here. I always like to start by giving perspective on what's happening in the global market. What's happening in the global market? In the global market, the alternative investment market is about 18 trillion and growing very fast. I think persons who are tracking alternative investment, you will be aware that asset classes such as has been growing significantly over the years, where new funds, new investors, new participants, and different type of private credit has become a big substitute in terms of fixed income and dividend for investors versus the traditional bond market. Private equity has always been a leader, unlocking significant capital. Similarly, VC, most of the great companies that you know of today, Yahoo, Google, NVIDIA, all of those businesses came alive because capital was willing to take risk in the form of either VC, private credit, venture debt, and other forms of structured capital to help those entrepreneurs to get their businesses to scale, and today we use them as household products. The other thing I want to point out here is that the emerging theme of AI and investment in AI, which in reality we have not seen that exciting markets like the Caribbean, where we are end users, has seen a significant amount of capital going into that area. For example, last year, almost 50 billion of new capital was mobilized into AI. 50 billion into generative AI. And everyone again who is following the news, if you listen to CNBC, CNN, just read it, you'd see that all the big tech firms, Meta, NVIDIA, Google, are investing significant amount of capital into what we believe and they believe and the world believe is going to be the most transformative industry over the next 20 years. More relevant to us is energy transition and what's happening there. Again, there's a big discussion, big appetite, and a level of consciousness in the world today whereby we are moving away from fossil to renewable. Even though honestly I'd like to make and find some fossil, right? But now you can still hit $10 billion. But there's a big shift. And there's many reasons for that. It's driven by, obviously, awareness around climate and the risk around climate, but also sustainability. And in some instances, especially in countries like the Caribbean, renewable energy can be, in the long run, cheaper than, and expose us to less volatility than traditional fuel sources. So you have seen 2x growth in that. And I'd like to
point out two other things that's happening in the global market. And I'll get back to that while it's relevant in the Caribbean as far as alternative investment is concerned. Allocation of capital by pension funds, and pension funds monitoring here, you are probably the biggest source of capital in every economy. Allocation of capital by pension funds, endowment funds, fund managers has been growing significantly. If my memory recalls, it's like 10% per year in terms of increasing allocation into alternative investment. Let me break it down. Basically, what pension fund managers in the US, Europe, Asia, big markets are saying, look, I like the public market, it has generated alpha for me. However, I also want to diversify and I want to invest in long-term liquid assets that align with my long-term liabilities. And of course, assets that generate superior alpha in many instances to certain public market assets without the volatility. And hence the reason why more and more pension funds globally are allocating capital to infrastructure assets, energy assets, etc. Impact investing, which is probably of all the alternative investment verticals, whether it's private equity, private credit, real estate, impact investing, where you are investing in certain sector with a measured focus to achieve impact, whether it's access to capital, whether it's reducing our greenhouse gas footprint, addressing climate needs, whether it's building resilience when you are investing in sustainable housing, or trying to secure food security by investing in sustainable agriculture. Impact investing is one of the fastest growing areas that we are seeing capital being allocated to. And when we talk about impact investing, many persons think about concessional returns. That's not what impact investing is. Impact investing is basically investing such that you get a very deliberate desired outcome versus I'm just investing and my only measured outcome I want is my return. I want to get my return as well as reduce poverty or increase employment. That is growing significantly, and we expect that market to hit 2 trillion, really 3 trillion over the next decade. CJAS obviously is very active in that area, and I'll talk more about that. All right, let's bring all of that home to the Caribbean. The most important thing on this slide is that the Caribbean, and I'm talking excluding Cuba, unfortunately, we have to exclude Cuba at the moment. It's not access to the market. We're looking at a region with almost 400 billion in GDP. The reason why that is relevant is because if we grow the alternative investment market, flexible capital, taking risk in real estate, private equity, private debt, infrastructure asset, impact, we can grow a significant market if we grow the market to be 3 or 5% of GDP. It's pretty big. 5% of 400 is somewhere close to 5 times 4, $20 billion. $20 billion of mobilized flexible capital in the economy will have a huge multiplier effect across the region. If you take that down to the case of Jamaica, a $20 billion economy, and we grow the alternative space here, where capital is flowing in real estate, private equity, private debt, etc. You're talking about an $8 billion or more US dollar type of market for risk capital. That's what is needed to help propel economic growth and drive
infrastructure development in the Caribbean. It has to be that type of capital at scale that complements the traditional financing. That's the most relevant data point on this slide. The other thing I would like to talk about on this slide is the opportunities in the Caribbean. You will see, for example, how much capital, and these are World Bank data and different research sources, how much capital do we need to invest in infrastructure over the next, let's say, 5 to 10 years? 21 billion. In the case of Jamaica, we probably add a few billions to that now, actually, with Melissa. How much capital do we need to add in the Caribbean when we talk about investing in resilience and addressing our climate needs? Again, 55 billion. So these are large amounts of capital which can be transformative to our society. Alternative investment has a significant role to play in this space. Let me give you an example. One of the areas that we are focusing as alternative investors, which we expect to have a significant multiplier effect in the Caribbean, is renewable energy. As you know, every Caribbean islands want to have, let's say, the most ambitious 100%, others are more 50% of their energy in the form of renewable. In order to de-risk those projects, get equity into them, then attract long-term bond financing, you need alternative capital. You need capital to go in and do feasibility study. You need capital to take equity position in projects, which is always a challenge. Equity. I've seen a lot of projects, whether it's geothermal or even solar or wind in the Caribbean, stop because there's no equity. There's no pension fund, and I'm sorry, pension fund, but I really want you to leave here feeling motivated to invest in alternatives. There's no pension fund in the region who has said, you know what, let me invest in a solar farm under a 20-year PPA that gives me predictable cash flow for 20 years. There's none. But pension funds should be owning those assets. There's no pension fund in the region saying, you know what, let me team up with some other pension funds and we actually put the equity in and own an airport asset or own a highway, like the Jamaica Highway in Canada, US, France, all over. Pension funds own those assets. Why? Because they are long-term cash flow generating asset with low risk. We should put money in that. If you put money in that, you mobilize money from pension fund into infrastructure, and then the infrastructure form the basis to catalyze economic growth. That's the type of thing that I want to see pension fund partnering with fund managers like ourselves and mobilizing money at scale into these areas. You don't need to be scared. You do not need to be scared because these are assets that are proven to be excellent cash flow generating assets over a long period of time. So these, let's call them, I like to use this word, these non-binding constraints that we have in our mind when we approach big projects and big opportunities. It is not real. It is non-binding. We're like putting them on ourselves. And we need to sort of unshackle ourselves and our mind from those so that capital can flow into great opportunities in the region. This slide is one of the slides I'm proud about. Why am I proud about it? It's because I'm not just talking about alternative investment in the region and the ability for entrepreneurs to convince investors to mobilize capital into all the different areas, private equity, real estate, private credit, etc. I'm talking about facts. We have had entrepreneurs over the last decade without a robust ecosystem designed to facilitate alternative investment, trying to forge a market in the Caribbean. So you have a few firms like ourselves and other guys here that have done this. But we want it to be at scale, and it has to be at scale. One of the biggest drawbacks with the Caribbean is that we really believe that we can't do things at scale. We can. We not, for example, putting capital in the right way. For example, as an alternative fund manager, we have very little capital under our management from outside of Jamaica and Puerto Rico and the US. All the other Caribbean territories have not. Well, maybe we have done a bad job. I probably take that back. We have done a bad job in mobilized capital from all the other territories. And I'll argue that other fund managers, and I'd like to motivate or stimulate other fund managers, let us go and convince those other guys in Trinidad and the OECS to mobilize capital into the alternative space. Because entrepreneurs like ourselves truly believe that we can develop an ecosystem where capital is complementing the traditional space and helping to propel our market. So, what is it that alternative investment bring for the investment community? So I just talked about we allocated capital into businesses, projects, etc. For the pension funds, long-term asset, diversification, cash flow, there's alpha in alternative investment, and that's the reason why the growth in the global market has been continuous over the last 20 odd years. For sovereign wealth funds, it's the same. And you have a bigger vested interest to actually see risk capital being mobilized and moving through the economy in a more frictionless way to help projects. And go down to this, family offices, which is let's say the new thing for very wealthy people. They like to take risks because they are working closely with entrepreneurs and other investors to generate the alpha that they need. So there's let's say a compelling argument why pension funds and other players should really focus on allocating capital to alternatives. All right, so I'm going to brag a little bit here, okay, about CJAS. So, as I said, at the end of the day, over the last decade, CJAS being one of the champions of the alternative market in the region, we are managing just about $700 million in alternative capital only, right? This is not your traditional bonds and so forth. This is all alternative investment in different areas, private equity, private credit, impact, etc. However, we have mobilized over 1.5 billion worth of capital across the region into P3 projects, acquisition financing, private credit for corporates, whole host of other areas, renewable energy. The point is, if CJAS did not attract 700 million in capital, we could not at least multiply that by 2 in terms of the amount of capital we mobilize for businesses. The multiplier effect is, I don't know what it's, the economists also would say, but the multiplier effect is much more than that. So the point is, with capital being mobilized, an alternative investment platform, this type of capital is going to take risks and create opportunities that would not have taken place. I've done, our signals, I've done acquisitions, where if our capital did not exist, that company could not do that acquisition and get to expand triple their EBITDA. On the other hand, our investors, for the most part, are very happy because we are paying them out great dividend. We are paying out great dividend every 6 months. Everyone knows Signals Credit Investment, great dividend every 6 months. The other point I want to talk about, which is a big thing that we are investing in right now, which is climate and resilience. We manage the only economic resilience fund in the region, the CCRF, which is focused on providing early stage equity to climate and renewable projects, as well as providing debt financing to different sectors, sustainable housing, transportation, and other resilient sectors. So we are not only trying to, let's say, be an evangelist, sounds good, for alternative investment. We are actually deploying capital in alternative investment. We are also attracting capital from the external market into alternative investment. We are attracting capital from the multilaterals, family offices, and all of those entities into the region, which is critical in order to scale the amount of available capital to businesses. So, if I should conclude, I always like to conclude, you don't need to read that, it's too fine. The first thing is that there need to be deliberate strategies from investors such as pension funds to put money in alternative investment. We have to build a very strong alternative investment ecosystem, similar to what we have in the US, Europe, etc., where you're looking at about 3 to 7 or up to 10 or 15% of GDP is in alternative investment. We also need to invest in big themes: economic resilience, climate, infrastructure. Those are the type of binding constraint that is affecting our society today and will affect it way into the future if we don't mobilize capital into those areas. And finally, and Signals always talk about this, so I have to talk about this. At the end of the day, we are financial intermediaries, strong governance, non-negotiable governance, governance of global standard is non-negotiable in our business and in every alternative manager business. You should make that a mantra. That's the only way we will be attractive to the multilaterals, the family offices in the US, in the Middle East, etc. Because when they look at your business, you have robust governance that are world class and they are comfortable putting capital with us to pursue projects in the region. Ladies and gentlemen, I think the opportunity for alternative investment in the Caribbean is tremendous. The runway is long, and I'm encouraging every one of us to try and participate in the sector as we push it forward. Thank you very much.
Thank you very much, Sheriff. And I say to you, if you need anyone to teach you about alternative investment, there is no one else better than yourself to do it. And I hear him talking about bragging. Yes, he has bragging rights where alternative investments is concerned. As I look to see if there are anyone with questions, and you can come forward, then the mic will be going to you. Just one question, there is, because this has been the buzzword, regulation. Do you face any regulatory challenges as you go across the region to basically support SMEs and other industries regarding alternative investments?
I will answer this question in two ways. First, yes, there's lots of challenges across the region when you're talking about investing in SME as well as attracting capital in different funds. Right? For example, pension funds in Jamaica and right across the region have limitation on USD limits, they have US limitation on investing outside of their territories, as well as they have limitation on even participating in investing in funds or companies that are not rated. So there's a lot of limitations. However, they represent opportunities, right? These are opportunities. If you can reframe some of those legislation, lobby governments and cause them to be more relaxed, then you open a floodgate. So it's really opportunities. And as I said before, they're a blueprint for these things. The other point I would say is there's opportunities for us to create specific legislation around alternative investment vehicles. For example, and I keep saying this, probably again, this is something I need to stop saying, I just keep on pushing. There's no specific REIT legislation in Jamaica, yet real estate is one of the largest asset classes in the world through which persons can become wealthy. So we need to make it easy for people to make money in real estate and make it through collective investment tools or schemes on the REIT guidelines, which we just can put that up from the US or Canada or UK and modify for our world. And you have the same thing for private equity. There's no specific private equity legislation in Jamaica. So there are a lot of opportunities as far as regulations are concerned.
Thank you, Derek. We'll take questions on the floor.
Good afternoon, Pauline Bailey, Observer. Very good presentation. I found a lot clear and then in your question a while ago. Go ahead anyway. Can CJAS take the responsibility to promote pension fund far and beyond your call of duty, to promote that particular one, using some of the suggestions that you gave, like pulling together airport and so on for long-term investments so that you see the benefits later when they are needed. CJAS.
Yeah, it's not very easy, and I'm very grateful for you asking CJAS to do that. Of course, CJAS is a deal-making team. We will always look for opportunities, and we will try that.
Is there another question? Go ahead. Should we get the green light?
All right. Yes. Good afternoon. Yes. Good afternoon, Mr. Cricket. Yes. So my name is John Stewart, and in regards now to the aftermath of Hurricane Melissa and its impact on the Caribbean, particularly Jamaica, not to mention the $55 billion gap that I saw in terms of climate financing, I have to ask, how would you structure your alternative investments in such a way that it could attract investors reasonably, as well as deliver returns while accounting for that gap?
First and foremost, very good question, and I think everyone in this room, including CJAS, is very sensitive around the impact of Melissa. To answer your question, I probably need a few hours really, and the reason for that is that
I can explain to you 50 different structures that we are looking at to ensure that companies and opportunities emanate out of Melissa get executed well while generating good returns and allowing businesses to come up. But in a nutshell, the way we approach and will approach business opportunities and businesses that we have to support post Melissa is to basically align the different type of capital, i.e. whether the company need private equity, private debt, or do they need impact capital with the needs of the company. And then we will try to ensure that the idea of flexible capital that's incorporated in the structure. And by flexible capital, I mean, we have businesses that it's not going to generate any cash flow for the next 6 to 7 months, or probably a year. But we have to design a structure that allows that, because the business is a fundamentally good business. So, as I said, great question, but I need a lot more time to tell you all about it.
Thank you very much for your presentation, Doris, and we ask you to give him a round of applause. Very informative presentation, and we are much better off today for what he has presented to us.
Thanks again to Barry Scott Gray, another round of applause. And for our moderator, Nigel Cole. And just to, since we are on the topic of alternative investments, and Barry Scott would agree with me that we could float an alternative idea in here, that instead of actually having lunch now, we're going to have our next panel presentation and then we go to lunch. So, Barry Scott has 50 different ways to structure that concept. So, ladies and gentlemen, at this time we have our panel on the duty of due care in broker-client relationships. Please help me welcome to the stage Mr. Leroy Palmer, Vice President, Group Compliance for Retail Investments Limited. He will be joined by Ms. Therese Kendall, Senior Vice President, Investment Banking for Retail Investments Limited. Dr. Karen Edward Malcolm, Head, Wealth Management, National Commercial Bank, Jamaica Limited, and Mr. Carl Townsend, Chief Country Officer, Capital Markets, JMB Group Limited, and rounding up our panel, Mr. Stuart Snow, Manager, Capital Markets, Sagittarius Investments, Jamaica Limited. Let's give them a warm welcome to the stage.
Right, thank you so much. So I heard earlier when Mary said that he was standing in between us and having lunch, right? So obviously that was not the case, so that's all easy. But we can make this very easy. As long as you nod and smile and clap, you'll be head go to lunch quite early. But I'm going to do a quick roll call. I saw some students earlier that just wanted to raise their hands. Students. All right. Also, want to identify the persons who are in the pension English region. Pension? Grace? Right. So, I'm just pointing out. So, I want us to give a hand to the Johnny Stock Exchange for a wonderful job. As you have seen, things have kind of flowed really nicely into each other. We heard about the regulation and what we can do there, and I know there's just such, the regulation. I wanted to make the point where it's that I was going to defend the pensioners, going to tell you, but you did point out that they do have their own mandates, and so it's important. So we're going to be talking about a relationship today, right? And any relationship, what do we think one of the most important ingredients of any relationship is? Trust. That's the first thing that came out, right? And so, we're going to be talking about trust a little bit, but more so specifically the duty of due care. And so trust will come out in that conversation. And so Jamaica, since in the context of Jamaica, we oftentimes see we operate in a low or we have a trust deficit in Jamaica. But we want to give some assurance today, and now we have a wonderful panel to do the job this afternoon. Of course, you would have heard the names. I'm going to invite them to tell us a little bit more about themselves, giving some background, and also to describe what duty of care means to them. Okay, go ahead, I'm going to start with Therese.
Okay, good afternoon, everybody. My name is Therese Kettle, and I'm the Senior Vice President Investment Banking at Burries Investments Limited. So what we do in investment banking, simply put, we raise capital and we provide strategic advice to our clients. Now, it would be remiss of me not to speak a little bit about Burries Investments Limited because, we're building a relationship and we're going to be talking about due care and trust between the broker-client relationship. So Burries Investments Limited is a publicly traded company on the Jamaica Stock Exchange. We have the distinction of being one of the oldest brokerage firms here in Jamaica. It was started by Rita Humphreys Lewin in 1977. We're a full-service investment banking firm offering asset management, bespoke financial services, investment banking, foreign exchange trading services. And as at September 30, 2025, our total assets under management stood at $436 billion, or roughly 2.7 billion US dollars. So that's a little bit about Burries Investments Limited. Now, getting into the topic, what is due care and what does it mean to me? It really means that we need to ensure that we're always putting our clients' interests first. We're trying to ensure that we take the time to understand our clients, whether they are retail clients or they are corporate clients. We're taking the time to understand who they are, what is it that they want to accomplish. And at the very forefront, we want to ensure that we're always putting their needs and their interests first.
Right. Afternoon, everyone. I'm Dr. Ariane Hepburn Malcolm, and I have the honor of representing the National Commercial Bank, Jamaica Limited, largest financial institution on the island. And I also represent the retail wealth distribution arm of NCB Capital Markets, largest deal maker, right? So, this afternoon, as we look at broker-dealer responsibility, it boils down to two things. It boils down to trust and care. And when I whittle down, institution needs that all the time put the back of their head, their commission structure, particular product they want to push, and instead focus on what is actually right for the client. I'll take that step further. Not only should it be right for the client should understand why it is right for them. Because many times, clients would say that, oh, I didn't understand that was a risk involved. So, us determining that their suitability is not sufficient, we have a responsibility to explain to the client and make sure that the client is on the same page with us. So as I said, it boils down to care and trust.
Hi, good afternoon. My name is Carl Condon. I'm the head of capital markets for JMB Group. JMB Group, as you all know, we're a publicly listed company. We are brick and mortar in 4 jurisdictions in the Caribbean, Jamaica, TNT, DR, and Barbados. And of course, in terms of the investment banking space, I would dare to say that we're the most innovative investment bankers in the Caribbean. We have done some of the most innovative transactions. just made two. It's not believe me. Right? The first came here in Jamaica. We did that, and then we got it followed. We have done first publicly listed preference share in Jamaica, and nobody else has figured out yet how to do it. But once we got rid of two. Right? So, still talking about two, let's see. But if you go to the heart of the broker-client relationship, I want to take it from a slightly different angle, right? Because you have investment advisors who are fiduciaries, so they have a legal and ethical obligation to put the client's interest ahead of their own. And then you have persons like myself, we're in the investment banking space, and our obligation is to provide the most suitable product, service, or advice to our clients. And when we talk about clients in our space, we're talking about persons who are looking to issue instruments, right? So whether it's debt, whether it's equity, or whether we're providing M&A advisory services, which we do at generally capital markets as well. So what we're looking at for those entities is what is most appropriate, what is most suitable given your goals and objectives, right? So if I speak about, for instance, one of the transactions that we did with CJAS, my good friend Harrison G, was a publicly issued perpetual preference share. So it's in the public space, you can speak about that. And CJAS said to us, they said, look, we are the largest alternative fund manager in the Caribbean, but we're not a DTI, right? So we can't take deposits from clients, but we do need funds to continue our business. And ideally what we want is long-term, stable funding. Can you help us to raise long-term, stable funding? And we said, of course, we have a formula for that, we know how to do it, the rest is history. Right, so it is what is most suitable. So from an investment banker standpoint, I'm looking to say what is most suitable for this client based on their long-term, short-term goals and objectives.
Good afternoon. I'm Stuart South, and I'm going to stick to the script. I know I'm between lunch and under the corporate plugs. But I'm representing Sagicor Investments. I have the pleasure to represent Sagicor Investments today. And just to give a little context, I am, just like Carl here, from the investment banking side of Sagicor Investments. So my perspective is really from the client who is the company and company principals. Like Carl, I share some similarities in terms of view on duty of care. At a very basic level, we have duty of care that emanates from contracts that we have with our clients. Embedded in those contracts, we have that legal responsibility to exercise duty of care. The second one is just professional responsibility. And I think as professionals within the industry, we can't just think of ourselves only, we have to think about the client and what the exact client needs are. And ensure that in business that we do, we spend enough time to understand those needs so that we can fulfill them. And I think the third and most important layer is really when it comes to duty of care for the public interest. And we're all here today to discuss the capital markets. And it's important to have a very functioning capital markets where people have that level of trust. Right? And they have that trust that brokers are going to carry out that level of diligence when they carry transactions to market. I know people will say, because we're investment bankers, we only have our interests at heart. And that's not true on the sell side. In fact, when you look at the incentives that sell side units have, we only get remunerated, we only get value from a transaction if it is successful. And for a transaction to be successful, you need a market, you need both a buyer and a seller. And for those two things to cross, the economics have to make sense for both parties. So we try to balance those interests, and we have fundamentally the market and investor confidence in mind when we're bringing transactions to market. So that's the basis of what duty of care means to me.
All right, sounds very good. And I heard some hand claps, so we're doing really well, so we're making our way to lunch, definitely. So, Carl, you touched on something I want to kind of just zone in a bit more. You spoke about the different elements of
the financial institution itself, where you have you yourself to be an investment banker and more persons on the retail side. How do you manage any perceived conflict that may be there, or how the interests, even if the interests are aligned, how do you manage that aspect of this?
Well, generally we have, clear segregation of duties, and we have independence across the firm. So for instance, on the investment banking side, our job, as I said before, is to work with clients, structure deals for them that then can be sold into the market to retail clients and so on. But the other side of that is that we have a robust governance structure that we have to go through. So, for instance, again, I go back to that signals example because, of course, it's the public domain. So when we said the signals, yes, this is a transaction thing we can do for you. Here's a term sheet, it's what it would look like. And they said, okay, we'd like to pursue that. I then have to take that to my various internal committees to get signed on. And each of those committees is looking at the transaction, just like what Stuart said. They're saying, okay, from our standpoint as a broker, does it make sense for us to do? But is this something that makes sense for the investing public, right? Have all the risks been captured? Can they be quantified? Can they be properly explained? And do we believe that if clients invest in this, they are going to get the kind of reward, the risk-reward trade-off is there for them? And I have that governance structure all to my board. And so, I want to work on a transaction, I put it all the way up through my process, and then I got to my board, and my board said, no, I don't think this one is suitable for us to pursue. And I had to go back to the client and say, look, and unfortunately, I didn't get board approval. So I think that robust governance structure, which I know permeates the entire industry, is what helps us to manage that conflict of interest.
Right. I'm going to put in a shameless plug right now for the second line function where compliance sits also the audit teams that also have input and review of some of these transactions. Caroline, I want to touch a little bit about the retail type of thing. So Carl and his team has a transaction, they think it's a wonderful idea. He brings it to your team to say, go and sell, right? But is there an element of discomfort? How do you assess what goes to a particular customer?
Okay, so good question. So when we get a transaction to sell, we know that usually every transaction or every product isn't for every client, right? The first things that an advisor, wealth advisor would do is start to determine based on their familiarity and relationship with the client, which client would this be a good fit for. So this is bearing in mind that on onboarding the client, they would have done some kind of asset allocation, determination, risk appetite determination. So last year we would have launched our chatbot, Simone. And so, for example, clients being onboarded now, even before they meet with an advisor, can go on WhatsApp, message Simone, and it asks a number of critical questions, like what their income is, what their level of their risk appetite is, what kind of opportunities they're looking for, what's their timeline, and so on, and it determines their risk rating. It also suggests an asset allocation for that client. So even before talking to an advisor, the client has an idea of where they fall. When they sit with the advisor will probe some more to ensure that this is in fact, the profile for the client. So when it comes around to the time where we have a deal or a product to position to the client, we look back one at that file and in conversation with the client, does this really line up with what we had agreed in advance of the sale of this product, right? So I love that level of transparency and the fact that the client has a level of awareness even before we come to them with something. So if we come to them, let's say with something that could be determined as high risk, based on what we would have produced to them, they know what percentage of their portfolio should be in high risk, right? So the responsibility is both ways, but to be honest, the burden of responsibility lays with the institution and with the advisor, and we don't take that for granted. So I say all of that to say, we know that every transaction is not for every client, and we make sure that we follow the rules in terms of even presenting it to the client, and most of all, making sure that there's comfort with the client before they buy the product or the transaction or whatever.
All right, thank you so much. That was excellent. So, Therese, when we speak about duty of care, we hear buzzwords like putting the client's interests first. We may hear about being prudent, being transparent, being honest. Tell me in practical terms, what does that mean?
All right. So putting your client first is similar to everything that everybody would have said on stage thus far, right? So whether it is that you're dealing with a retail client or you're dealing with a corporate client, what does that mean? Harriet just spoke to the point that she needs to ensure, and she knows that not every product that is out there is for every single client, and that is what is putting the client's needs first. Now, on the corporate side of things, Carl and Stuart spoke about it, right? On the investment banking side of things, this is where we structure transactions and we provide strategic advice to clients. Now, sometimes clients might come to you with an idea in terms of exactly what it is that they would want to do with their business, right? So some companies or some clients may come and say, boy, I'm ready to list. And when you look on the financials and the fundamentals of the company, when you look on the governance structure that is in place for that company, they are not in a position to list. But guess what? We're on the investment banking side, and how do we generate our income? Through what? Fee income, right? So we could easily say, yeah man, we're going to take you public even though the client is not ready. So when we talk about UCare on the corporate side of things, it means that we're taking a step back. We're trying to ensure that we understand the client's business, we understand the strategic imperative that that client wants to achieve, and we're taking that into consideration in terms of how it is that we guide that client on their trajectory. So it might be easier for us to say, yeah man, let's go with your idea. But truthfully, we have that due care, we have that responsibility, we have that fiduciary duty to our clients to ensure that we are giving them the best advice. And practically, sometimes that is us stepping back, looking at their business and giving them an alternate solution instead of.
So I want Therese to give, I probably ask Stuart, in terms of this due diligence process, what is the length of time, so the audience can really understand that this is not an overnight thing, and what usually takes place in terms of building the relationship and ensuring the customer gets the best deal at the end of the day.
Absolutely. Due diligence, there's no magic formula or a time period that due diligence takes. For example, for a publicly listed company, it might be short because there's a lot of information available. Whereas for a private company, you have to take more care in getting to know the company some more. But the most fundamental thing when you take with due diligence through the different areas of the business and really uncovering what it is and how it is that the business operates. So we're looking at fundamental drivers for the business and industry headwinds and tailwinds. What are those things that impact revenue, right? We need to know how the business goes about its operations, how the product